Confirm you can see my screen now. Confirm you can.
Yes, sir. You are on mute, sir, Chris.
All right. So the most important thing, what's triggered when you are dealing with IFRS 9, the first thing you need to understand is your para 9. So the para 9 is the one which is going to take you to B9. But please, I want to do the practical aspect of this standard, isn't it? So when I go to IFRS 9 at inception of a contract, an entry shall assess whether the contract contains a lease, isn't it? So a contract, but when can we say a contract contains a lease? So number one, there should be a contract. Then number two, that contract, isn't it, conveys the right to control of what? There is an identified asset first, but that identified asset, we control that identified asset. How do you prove we control channel dealer from B to end? Is either we is an benefit substantially or economic benefit. We have the direct to how and what, isn't it? Then, so these are over a period of time. So there should be a period of time, isn't it? But this one is for a what? For a consideration. That's the basic of IFRIC 16. So number one, there should be a contract. There should be an identified asset. There should be control. There should be period of time. There should be consideration. Happy days. So please, whenever, even let's mute our mics. If this question is triggered as in audit, when they need substantive procedure. In other words, substantive, we always start from the risk assessment. What can go wrong? So ask yourself, what can go wrong in terms contract in terms of identified asset? Do we even have the identified asset? What can go wrong in terms of the control? Do we even have control? Period of time. Then so the period of time, now we talk about the lease term, isn't it? We talk about the lease what? Term. So what's key? So the first thing, that's what para 9 is explaining. But this para 9, they have to take out to B9 team. In simple terms, ndikusummarize, please ndikayamhanyawo mondiudza handiti kuitira kuti hazvibatsiri. Ndoda kuti kukazongonziwo maybe ndo yatongouya vanhu vari kunopasa exam ndizvoka. So if you go to your B9, handiti your B9, they now talk about identifying a lease. Ndizvoka. So a lease tine is to assess whether the contract conveys the right to control the use of an identified asset. So do we have control over the use of an identified asset? That's the key thing. Do we have the control over the use of an identified asset? So identified asset yedu B13 inobva yakuburitsira kuti when can we say we have an identified asset? So they are saying it can be explicitly specified in a contract or it can be implicitly specified. Explicit kutokudza kuti motor ion ine number plate AD chakati chakati. Implicit team ndopaya pamunoti action speaks louder than words. Ndizvoka. Is it making sense? That's implicity. So there is explicity, there is implicity. Then, but for us to say there is an identified asset, don't worry, ndichaita a small practical question. Tinofanirwa kuprova B14 ushu. Pane zvinhu 2 to prove. But tikuti isusu, supplier should not have substantive substitution right. Ndizvoka. So to prove supplier haana substantive substitution right, A, anofanirwa asina the practical ability to substitute the asset. Ndizvoka. Or alternative. Then B, the supplier would benefit economically from exercise of its right to substitute. So anofanirwa asina these two things. Is it making sense? The supplier should not have these two things. That's the identified asset. Then from an identified asset team, we want to take it step by step. Then that identified asset, next question is it explicitly or is it implicitly? That was the first part. Then takwenda to control, but it's control of what? Of that identified asset. So in other words, team, do you agree with me ndikatoshaya the identified asset and tikwanise kupfuurira kunodiscussa control? Mukupanzwisisa? If I prove there is no identified asset handikwanise kucontinue kuchinodiscussa chi what do you call it? I can't go to discuss control. So control only all right. So team, I can't go to the discussion a control. This is now to prove that there is an identified asset. So a basic team ndikuti fambe mbijana because my assumption but I'm not going to make an overall assumption. Why? Inogona kuya ifavorite yemaexaminer uri kurisk assertion. So kurisk assertion you need that understanding the basic principles iyoyo, you need the general understanding. So handikwanise kupa mhanya because umwe anogona kusarira ipapo. Then do we have control? So next thing, so tikuti pa control tine zvinhu 2. Your control is split and into, if you go to your B21 up, to prove that an identified asset. So I can prove control. It is the right to obtain economic benefit from the use. Ndizoka ndo prove say ndo zviri kuprova with your B21 ndizoka in detail. So your B21 to almost your B30 mukatarisa zviri kudila to B23 ndizoka inodila ne the right to obtain substantial economic benefit. So kana chiti obtain substantial or economic benefit team ndikuti inini kana ndirini ndiri kuusa this asset, everything which is going, I can sublease that asset, all those things. Then ndine the right to direct the use. The right to direct the use, which is your B24. Inobva yanosvika newe kubichi B39 pabatikere mukupabata to B29, sorry, B29. So that's when we say kuti tine the right to direct. So apa ndoda kungoprova kuti is there a lease. But don't forget that tine identified asset. Number 2, tine control. But there is the issue a period of time. So period of time, that's another thing which can be triggered by the examiner. If you go back to your para 18 here, let me quickly rush to para 18. If you go to your para 18 here, they talk about the lease term. Remember, ziripa zvinhu zvandiri kubuilda izvi team zviri kungobva up from my para 9 iri kuti it's a contract which conveys the right to control, ndosandaisa control of an identified asset, vandaisa identified asset for a period of time in exchange of a consideration. Is it making sense? So that's the thought process yaunofanirwa kubuilda muexam. So chinonzi lease term, that's another key area. An entity shall determine the lease term as what? The non-cancelable period of a lease together with both periods covered by an option to extend. So in other words, the lease year it's 5 years, but it turns an option to extend with another 3 or 4 years. So the question is, lease term young if 4 years here, sorry, it's 5 years. We've got an option to extend with further 3 years. So the question is, lease term young 5 years here or 8 years? That's another key area which might usually affect students, isn't it? So how do I prove that lease term young it's 5 or E8, your para 18 inobva yakuudza. It should include the period covered, the non-cancelable period, which is your first 5 years, plus together with both the periods covered by an option to extend, but there is a condition. If the lessee is reasonably certain to exercise that option, Tim, it's not guesswork, it's zvinhu standard. Then 2 periods covered by an option to terminate the lease if the lessee is reasonably certain not to exercise. But to prove say para A ush ndopakuya para 19 in assessing whether we are reasonably certain to exercise an option to extend a lease or not, or the option to terminate, an entity shall consider all relevant facts and circumstances. But what's key here, and chakwanise kuti mudzokere kunoflaga mastandard enyu, but dai takazviita before ngadai ndakakuratidzai kuti how do you flag. So tikuti isusu toda consider the period, pane kanhu kataurwapo to consider the economic incentive mukubabata. So ndikunzi inini lisi yangu i5 years anditi, but ndine option to extend anditi, option to extend nedzimwe 3 years. So muvhunzo uri kunzi, can I say my lease is 5 years or my lease is 8 years? When can I say it's 5 years? When can I say it's 8 years? Are you following, team? You can show me through reactions if you are following. So is it 5? Is it 8? That's the question. I Gariga, or it was a reaction. Okay. So how do I respond to that question? Should I consider 5? Should I consider 8? Team, it's not guesswork. That's why para 19 irkuti, let's consider, does those circumstances create an economic incentive for the lessee to exercise? Ndopanobva patrigwa B37, team. So your B37, let me quickly go to B37. So B37 inobva trigger. So B37 is simply giving you examples of what constitutes the economic benefit. So for example, Lisa, I'm paying what you call the contractual agreement, I'm paying 10,000. But if I decided to move to market, vamwe vari kubhadhara ma 15,000. Do you see the economic benefit, team? Do you think I will move from kwandiri kubhadhara 10 ndichienda kwe 15 indine option to extend kwe 10? Hello, is it making sense? That's the economic benefit. Number 2, pamwe the area yandiri located pari kuitika development, pari kuita increase in activity etc, which can increase my value. That's another aspect which I should take into consideration. Oh, so B37 team iri kungono apply its application of para 19 iri kundipa zvinhu zvinoconsider zvandinofanirwa kuconsider kuti nditi lease term yangu, is it 5 years or 8 years? So if I can meet the economic benefit aspect yataurwa kupara chi 19, hello, ndo pandinochiti saka lease yangu apa it's 8 years or it's 10 years. So it's 5 years or it's 8 years. That's the lease term. Pabatika rapa team. Pabatika. So in simple terms, let me take you through this small question aka. Todaita small question aka. And todango prove then doenda initial measurement. Confirm you can see my screen. After putting CTA behind, you started your own accounting consulting where you advise various clients related matters, understanding the value of your profession and effort. So tapiwa ma different queries, team. The first query iri kuti Starbucks, a coffee company, enters into a contract with AXA, an airport operator, to use the space in the airports to sell the goods for 3-year period. The contract sets the amount of space, and the space may be located at any one of several boarding areas within the airport. AXA has the right to change the location of space allocated at any time during the period. There are minimum costs of AXA associated with changing the space for Starbucks. Uses as a kiosk that it owns, and that can be moved easily to sell its goods. So mubvunzo uri kuti, is there a lease up? Mukupa bati here team. Mubvunzo wedu, quickly go through. Is there a lease? That's the question. Is there a lease? Ndoka mubvunzo kedu. Is there a lease? Is there a lease? Tapedza. So team ndatini to prove kuti tine lease apane zvinhu zvingani. Hello? Anyone? Someone just answer how many things I should prove to conclude that there is a lease? How many things should I prove? Anyone? Is there any hand? Or you can unmute. Let's just unmute, Tim. Hello? How many things which can prove that there is a lease? And please, musa lose tumwe tuma easy marks tunowanzoluzwa nema-students. Ndizvoka handidi kuti muluze ma-easy marks team. Please get all the easy marks. Ndizvoka get all the easy marks in the. So issue yangu team chekutanga ndati pane zvinhu zvingani. Anyone who still remember? Team ndatini to prove kuti pane lease. Number 1 ndiri kuda chinhu chinonzi contract. Ndizvoka. Number 2 ndiri kuda identified asset. And first identified asset. Then the next question, do I control that identified asset? Then I need the period of time. So then ndoenda pa consideration. So ndipandiri kuti team discussion yangu ikatongorambira pa contract and tichakwanisa kucontinue apana lease. Ikatorambira pa identified asset, I can't continue. Don't waste your time exam. You want to know there is no identified asset. What else going to do that the issue of control? Then 2, when you are answering an exam, if you understand that's what the standard says. So principle for para 9, B9, ndo tarisa contract. Number 2, ndo tarisa identified asset. Number 3, ndo tarisa control of that identified asset. Number 3, the period of time. Number 4, ndo tarisa the issue to do with what do you call it? I consider the issue of consideration. So in our case here, team, chekutanga, please don't lose these easy marks, especially ku IAC. Chekutanga, ndatoudzwa na examiner, ndizvo here, kuti isusu pane contract. Confirm. There is a contract. Tatoudzwa up. Muscenario. Saka ukutotudza sub enters into a contract. So contract ndobva ndatika. Ndizvoka. But for what? To use a space in the airport. So the space is specified. To use the space in the airport. So the space is specified in the contract. But the question, that is space, ndizvoka, is it an identified asset? Ndizvoka. So to prove good, is it an identified asset? Ndopanda kuendesai ku B14. Does what B14 to consider kuti, does the supplier have the substantive substitution right? Mukupa battery. Even if an asset is specified, sakataudzwa there is a space, but the customer might not have the right to use if the supplier has my substantive right to substitute. So let's prove. Toda kuprova zviri practical team. Let's go back to our case. So ndoda kuprova ende mukatarisa para B14 inobva yati. Listen. A supplier right to substitute is substantive only if both. Mukupaona. Only if both. So I should prove both A and B. So the first one, supplier ane the practical ability to substitute alternative asset throughout the period of use. Obwaenda scenario. Ndobva ndati yes. Why am I saying yes? Ane the supplier has the practical ability to change the space used by the customer throughout the period of use. Why? There are many areas in the airport that meet the specification. Mukuzviona here team. Tatodzwa there are many The contract says the amount of space may be located at any one of the several boarding areas within the airport. Maonere, the practical ability. Zvukudiwa examiner, chinonzi application. You see the application. There are many board spaces which our stock can be allocated to. So the practical ability, but I should link with what is in the scenario. I think that was the last part. So there are many areas in the airport that meet the specifications for the space in the contract. So the supplier has the right to change the location of the space to other spaces that meet the specification at any time without the customer's approval. Ndozvokufanira kuudza examiner. But ndaprova chi, I've just approved A, but B14 not if both. So I should prove B. The supplier would benefit economically from the exercise. This is the principle. Then chinonzi application. Let's prove the supplier will benefit economically from this. Number one, taudzwa kunzi there are minimal cost up. Toda kuprova kuti anobenefita. There are minimum cost acts associated with changing the space for Starbucks. Mazvoonere kuti I'm proving kuti he can benefit economically because there are minimum cost in doing so. Then not only that, which means if he changes, akawana munhu anokwanisa kumpa mari iri better than what I'm paying, who needs the space I'm allocated, they can easily shift me at a minimum cost. Hello? So I've proved. Therefore, ndisandaenda kure, there is no identified asset. Discussion yangu yapera. I can't proceed to go to discuss about control. Hello? Mukupabate reti.
Hello, Secretary.
Yes, Taku.
So, murikuti kana pakaitika scenario yekuti panogona kunge pane imwe place yekuti ndinogona kuendeswa. But kana pasati pane mukana wekuti pandiri inini pacho panowana ari kuda kupa like mafacts ekuti panowana ari kuda kunyatso kupauya zvinozoita kuti ndibviswe ndichiendeswa to the next place.
But isusu chatinongoconsider is substantive. Is he capable of? Wababata.
Okay.
Does he have the? Saka muscenario medu tatoudzwa vanobva havakubirire. Please kuexama havakubirire. Vanotokupa all the information. Handisi. Hatite ma-assumptions havaisiye iri hengi tako. That's key. All right. Shall we proceed? So, this is a team application. So, please always, per solution yako, paurutaura the practical ability. If what you so do that, there are many several spaces. One and is within access the right to change the location of the place to stop at any time during the period of use. This is number two. Don't you end up who benefit per B14 per B party? The supplier would benefit economically from the exercise, which is the principle. Then to apply to prove that there is economic benefit, there are minimum cost access associated with changing space for Starbucks. Therefore, which means they can use it for something which is more beneficial than us. So here, to conclude, there is no identified asset. I will not need to discuss. I will not please. Then, number two, let's quickly go through ACA. CA enters into a contract with MC, a ship owner, for the transportation of cargo from Durban port to Maputo port on a specified ship. The ship is explicitly specified in the contract. MSC does not have substitution rights. So the ship is explicitly specified in the contract, and MC does not have the substitution right. Please, kanataku anzo muvunzo wakadai so mu exam. Ngatiratidzewo examiner kuti tazviona kuti there is an identified asset. Mazvionere. So the identified asset is already stated mu scenario. So please, usaite kunge usina kuzviona. nyasovaratidza kuti ndazvipika ndizvoka. So there is an identified asset. The ship is explicitly specified in the contract and the supplier does not have the right to substitute the specified ship. Mukupabata imi munoda kungochimhanyira, please, it's given. So there is no need for me. Please, let's share with our colleagues the direct link that I've shared. I think pano vanhu vari kuuya inbox kwangu. Let's share with others so that ndifocus on this. So it's hautangire pekunoti control. Tanga why? Because B9 haitangire nekuti control. Inotanga nekuti there is contract of what two. Contract though inozopedzisirwa because ndo inozoprova kuti there a lease. So ndikubvira pekuti is there an identified asset? Here it's clearly stated by the examiner. So I should acknowledge there is an identified asset which is clearly specified in the contract and the supplier does not have substantive substitution right. I've explained it. Happy days. Is it making sense? I've explained it. Then after I've done so, then the next thing I have to do, the cargo will occupy substantial or the capacity of the ship. The cargo. Contract specifies the cargo to be transported on the ship and the dates of pickup and delivery. MSC operates, maintains the ship. Who? This is still CA, but who maintains and operates MSC and is responsible for safe passage of cargo on the ship? CA is prohibited from hiring another operator for the ship or operating the ship itself during the term of the contract. So, is there a lease? So, team, how do I build my discussion? My discussion, identified asset. So, the identified asset, which is the ship, is explicitly specified, and the supplier does not have substantive substitution right. Number two, then the customer has the right to obtain substantial or of the economic benefits from the use of the ship over why its cargo will occupy up. Our cargo will occupy substantial or the capacity of the ship. So the right to obtain, because that control is split into two. One is the obtain substantial or economic benefits. Then there is the right to direct how and for what purpose. So please, who the examiner, in terms of obtaining substantial or benefits, it's given. But my last question now is, do we have to direct the how? Do I have the right to control the use of the ship? That's where my issue is. Here, the customer does not have the right to direct how and for what purpose the ship is used. Why? Which is your B25 to B27. How for what purpose the ship will be used is the transportation of cargo from one place to another. And this thing, team, it's predetermined in the contract. So please, any aspect, if it's predetermined, how it's going to be used, it's already predetermined in the contract. It's predetermined. So which is your B27 to B27. So if it's predetermined, so the customer has no other decision-making right about the use of the ship during the period of use. It does not have the right to operate the ship. They did not design the ship because it's not customized. The customer, so you simply have the same rights regarding the use of ship as if you were one of their customers, but transporter their cargo in that same ship. Therefore, Atina the control the right to direct how and for what. But my own, as I was building my discussion, the proof why is there an identified asset? The proof why can I obtain substantial or economic benefits? The proof but the how ndio yanoramba. Saka ndakutoconclude there is no lease. Hello? Did it make sense now? So that's the first part. So team, the first thing, the discussion usually are in a measurement. Is there a lease? Which is it's your B9. Your B9 takes you to your B14. Your B14 identified asset. Do we control that identified asset, which is my B21 to B23? Then the question, do I have the right to direct how and for what purpose? This is which is my B24 to B29. Then, if I can prove that the period, which is my lease term, but lease term which I observe mostly, I'm worried about the lease term when I'm now doing the initial measurement. So let's go to the initial measurement. If we are happy, can we go to the initial measurement now? I would go calculator. Can you show me through reactions team? In this way, we're going to run a class. So, thank you. I can see reactions. So, I want to go to the initial measurement. Team, I need you to interpret the standard very well and carefully. The reason why you understand this. So, let's go to para 26. So, there are two things, team. When I'm dealing with lease now, if you go to para 22, we only have one accounting method, which we shall recognize the right of use asset and the lease liability. So which brings us to the initial measurement. So when I'm dealing with the initial measurement of the lease team, mukatarisa para 23, it could deal an initial measurement of the right of use asset. But the standard doesn't start from para 23. Why? What constitutes the initial measurement of the right of use, we start with the amount of initial measurement of the lease liability as described in para 26. So mukona kuti andikwanise kutanga pa para 24 ndisandaenda pa para 26. So I should start from para 26. So pa para 26, what's key in para 26? So para 26 team, it could do the how do you calculate the lease liability. So ndoda kuti mubva maona working itoripo apa. Paunonzi substantive procedure, risk assessment, it's given. Let me prove to you. Barcode number 1. At commencement date, LSE shall measure the lease liability at the present value, meaning to say ndoda present value. Which is my question mark. And let me put a question mark here. Then, of what? Of the lease payments, which means payments, which is my PMT. But lease payments, the PMT iriku constitute not my lease payments, which means I need to understand what is a lease payment. Then, do not munenge muinazo team, please. We have all these things in exam. Munenge muinazo. So then, which is your PMT? But that PMT shall be discounted, which means I using what? Interest rate implicit. Interest rate implicit pan up X percentage. Then what? If the rate cannot be that rate cannot be readily determined, the lessee shall use the lessee incremental borrowing rate. So I can be interest rate implicit. I can be incremental if we failed to identify the interest rate implicit. But para 27 becomes interesting. Vakuchino define what constitutes a lease payment up. What constitutes a lease payment? So mukatarisa number 1, varikuti kune ma fixed payment, including in substance fixed payment. What is variable lease? All right, let me explain. Pavanot in substance, these payments varikuti chi do inove anobatwa ne para 27. Kune ma variable which depends on an index. Ndizoka toda tipa bati apa team. So ndo chavarikuti PMT each. Machon. So pane fixed payment kuti kubhadhara 10,000 per year. Tonyarara. Then we might have a circumstance yekuti it's variable which depends on an index. In on the index team, think Zimbabwe situation, time of an inflation, ndizoka rate yaigara ichichinja. Saka munhu anogona ngonditi inini rent yangu i 1,000 USD auti munzwisise katriki karipo ndizvoka, but iwewo unondibhadhara nerate iripo at the time. Hello? Mukupabate rate, uchange uchindibhadhara nerate iripo at the time. So kana rate seyemuzimbabwe kana iri pa35, which means ndiri kubhadhara 1000 times 35, ndizvo. Rate ikaenda pa40 ndakubhadhara 1000 times 40. Night team, my question ndeyekuti lease payment yangu yachinjera. Munhu anditi rate ikachinja unongondipa zvikuenderana nerate. Mukupabata the basic, the concept yacho. So ndo pari kunzi in substance it's fixed ingori 1000, but munhu azono ibenchmark against an index, against a CPI, against inflation rate kuti angomaintaina value. Panziko here team. Ndo variable iri kutaurwa apo. Then NB ibva yamaziva kuti variable lease payments which are not dependent on an index, like for example variable lease payments which depend on performance, they are not included in the lease payment. Iyo expense waka 1. Nabatike rate. Expense once, you expense it once, it's an expense. It's not lease payment because I used to meet the definition of the lease payment. It's not meeting the definition of the lease what? Payment in terms of what? In terms of our section section 27, para 27. Then let's proceed, team. What Bhavati? Amounts expected to be payable by the lessee under residual value guarantee. Team, digital payment, don't forget. So you know the residual value guarantee. Trukuti at the end of the lease, unozondipa mari yakati, ndo yamunoti future value. So future value, it's a lease payment. Mukupabate team. Or it can be a penalty. So mukatarisa pa lease payment, we have got these two. The first two. Through constituta yauri kuti PMT. Tibva tabatsirana ipapapa. I know kune vatosvika this stage vasingapazive. This is your PMT. Then kune ma payments are kuitwa at the end of the lease term. Either you want to cancel the lease, which is your penalties, or tawira not at the end of the lease, uchangondi badara this much, and which is your future value. So can you see that our lease payments are divided into two? Which the ones which are paid in future, we call them future value. Kweta ari kubhadharwa now on the PMT. Hello, please. Zanditro mashura ku exam. So that's how you determine your lease liability, isn't it? That determine the lease liability team. Ndakudzokera naro kupara 24. Ndakuda kuchidetermine my right of use asset. So the first journal tatomboenda kure team, it means there is an asset, there is a liability. So the first journal rako rekulease, it's debit your right of use asset. Debit your right of use asset. Credit your lease liability. Ameno kana ndiri kubatika team. If ukasara, feel free to ask the team, please. Itongo assume out pamwe ndozvikutongo yamu exam, please. Let's assume what if kana chiricho chikuya mu exam. Ndizvoka. So feel free to ask. Musasare muchinzwa kubirirwa. Ndizvoka. Ndine answer NUS. So can you see the aspect yaitika pa team? Ndizvoka. Then ndo pari kutanga the first journal. Not muone journal ritorimo bhuku. Then ndochidzokera kupara 24 ndaita the first journal, debit right of use asset, credit lease liability up. Parkunzi, the cost of the rights of use shall comprise the amount of the initial measurement of lease liability. So ndo pandati debit right of use asset. And is it right of use asset up. Ndo andu debit first. Ndo credit lease liability same amount. But kuzorine zvimwe zvicha constitute right of use asset is B, any lease payments made at or before the commencement date, which is your prepayment. I debit right of use asset. Ndizoka ndo creditor bank. Out munzwisise team. Then what else? Debit the receiver, credit the giver. Form 4 ndio inoshanda. Any initial direct cost, same journal. Debit right of use asset, credit bank. Then any estimate of any incurred by the lessor in dismantling. Nope, I'm not debit right of use asset. Ndizoka. Then credit what? Provision for dismantling, which is my IASG 37. Tapedza journal re-initial measurement. Pana sara here tibatsirani. Can you see kuti journal ritorimo standard team? Aukuratidzai team. Kuti everything is there in the standard. Mariona here journal kuti ritorimo. Assets, don't forget vamwe maiti hainzi pills. Vamwe maitirwa inonzi apped spoil zero. Kuti which items have got a debt balance, which items have got a credit balance. I can apply that basic O-level stuff. Let's proceed. So that's the first journal. That's what I first cover. So the journal is given. I say Nele.
I say, Chris, I have a question. I want to ask how we treat a deposit that we pay when we are entering into a lease. Is it initial direct cost or it's...
What? Can you come again, Senele?
Okay. Tukuti, say toda kupinda mu lease izvezvi, right? And they say our rental amount is $100 and they say that is the lease payments that we're going to be paying, but before we need to pay a deposit of the same amount to maybe hedge against my risk. So I'm asking, could that deposit,
it's an asset kwatiri because it's directly, and remember what constitutes an asset. Don't forget from your basic conceptual framework what is an asset. Dine right, dine potential to obtain right benefits, then dine issue control. Saka if I pay something in advance, capitalize because it was for the purpose yekuti ndiwe ne asset. Any cost directly attributable to bring the asset in a place and condition to operate in the manner intended.
Okay, thank you.
All right. So team maonere journal rapera. Don't worry, ndikuita ka practical example manje. Maonere kuti journal ritorimo standard. Is it for me? What's that? You can give me the correct narration, interpretation. Hello, Bumi. I can see a hand. Let me spotlight. Is that a hand? And that spotlighter. All right, it's fine. Let's proceed. So another key thing, team. So ndikuita a practical question, but ndoda kuti team, my exam tikuda 50%. Tudongongwava 50. If I have just the basic appreciation and understanding, I can still pass. That's why ndikuratidza kuti the standard unaro mu exam team. Asi kuda vanhu vanobva vaomerwa kunzi zvazodai so etc ndizvoka. Then the next thing, ndakuenda ku subsequent measurement. So for subsequent measurement, this one I go to para 29, here right of use asset. Mukatotarisa inobva yatokudza kuti ndo patino consider accumulated depreciation. Mukupona. So the right of use asset subsequently at the end of the year, takuti debit depreciation. Mukupona. Auti mutoona majournal munawa credit accumulated depreciation. Varutokudza, which is your para 29. Then for the lease liability, subsequently, I go to my para 36 up. How do we subsequently measure? Increasing the carrying amount to reflect interest on the lease liability, reducing the carrying amount to reflect the lease payments. So ndakuskoti debit finance cost. This is debit finance cost. Then do vanda skipper a line in case, and this is what balancing figure yangu ichabuda kuside group. No creditor bank. Your bank team, that's your PMT. Up PMT. Then the difference between the two becomes your lease liability. Those who tell on para 36 up. Happy day. So para 36, it's dealing with the subsequent measurement. This one. All right. Then let's proceed. Questions before I proceed? Kuni atinozoti reassessment. Reassessment. So when can we do a reassessment of the lease? Ndikuitira kuti tizongonoweka tuma questions twese ka one team. Ndizvoka? So reassessment inotrigwa with which part? Reassessment yakunoaffectwa ne para 39. When do we perform a reassessment? So a reassessment is done after the commencement date. A lessee shall apply para 40 to 43 to remeasure the lease liability to reflect changes either to the lease payment or inogona iri change in lease term. So punishing two team, it can be the payment, it can be the lease term. So para 40 over that, a lessee shall remeasure, but chino calculate what team. It's the remeasurement of the lease liability. This remeasurement in lease liability ndio yatinozongoita an adjustment to the right of use asset. Think about your para 26. For me to have a right of use asset, I first determine the lease liability. What I have determined as the lease liability, ndio I'm going to recognize or say right of use initial. And so if there is a remeasurement, what is remeasured, calculated is the lease liability. But that same lease liability, the amount they increase or to decrease in lease liability, that's the same we are going to adjust to our right of use asset. So right of use asset inozongozi adjustment. All right. Then, over that, a lessee shall remeasure the lease liability. Get this. Using the revised lease payment, using revised discount rate, if either the B and ones in if there is a change in lease term, team pakaitika change in lease term, it was 5 years, it's now 8 years. Tinoshandisa revised discount rate. Please. And zvinobva zvanyaso clarify para 41. In applying para 40, a lessee shall determine the revised discount rate as the interest rate implicit in the lease for the remainder. For the remainder of the lease term. So you could discount the revised discount rate over the remainder of the lease term. Then we go to if there is a change in lease payment, which is my para 42. A lessee shall remeasure by discounting the revised lease payment. I'm not using the revised discount rate. Please, if there is a change in the amount expected to be payable under the residual value guarantee, so pakaitika change in the lease payment, let's discount the revised lease payment. But I love para 43. You know that in applying para 42, yakutokudzidzisa calculation. A lessee shall use unchanged discount rate, which means the discount rate on commencement, unless the change of lease results from a change in floating. A lessee shall use the revised discount, but the issue team, unless we use unchanged discount rate. Team. All right, let's do a practical question. All right, the next question. Yes.
Can you kindly repeat what you just said? I didn't quite get it.
All right. So what good if there is a change in lease term? Ndizo. Kana tinofana kuita remeasurement of our lease. Ndizo. If there is a change in lease term, we use the revised discount rate over the remaining lease term yasara. Ndo the first part. Then the other part of what if there is a change in lease payments andile. Tino atichinje tinongo discount the revised lease payment, but tichingoshandisa the old discount rate. But I'm also going to apply it pantining in that kuweka. I'm going to emphasize it further andile.
Okay.
I'm going to emphasize it further. Happy team. Happy. Questions. Wow, no questions. All right. So, hi Chido. All right. So I want to show you something. I think I saw it. Let's use this simple question, team. So there are instances, team, ekuti vanogona kukunyima interest rate implicit, but they can give you the inputs to determine your interest rate implicit. Is it making sense? Hello? So it's not always where you can use IBR. IBR is only used if we cannot determine the interest rate implicit in the list. So, for example, let's accept CA is a lessee and SA is the lessor. Ignore VAT. So tapiwa tine cost of asset iya toda kulisa annual lease payments edu tukubhadhara 220, guaranteed residual value is 120, we have unguaranteed 50, lease term yedu is 5 years. So team, bobva vati calculate your interest rate chi implicit. What's your interest rate implicit in the list? So to determine interest rate implicit mu list team, please, pane chinhu one chandoda kuti tibate. If I go to the definitions, what's an interest rate implicit? Let me quickly go to the definitions here. Team, let's go to the definition of interest rate implicit. Ndizvo vari kuti chiko chinombonzi interest rate implicit is the rate of interest that causes the present value of the lease payment unguaranteed mukupabata team. So vati chekutanga the lease payments, and don't forget your para 27. Para 27 yati the lease payment are made up of kune the fixed, kune the variable which depends on an index, kune the guaranteed residual value, pane ma penalties. Hello team. So pavari kuti lease payments zvinhu zvese zvandataura zviri included. Mapabate here team. All those things I've mentioned, they are included. Pavati lease payment, vari kungokuvhunza kuti unoziva here para 27. Vari kuti lease payment which we defined in para 27. Hello? But that lease payment, if you go to your para 27, it does not include it does not include the unguaranteed residual value. It does not include the unguaranteed residual value. Happy days. But interest rate implicit now, yakuti chinonzi interest rate implicit, the present value include both the guaranteed and the unguaranteed. Mukupabata. So for me to determine interest rate implicit, if it's not given, assume kuti iyanzi cost is your present value. Mukunzwise here team. Then PMT yangu, that's my 220, I don't have a problem. But for future value, I consider both the guaranteed and unguaranteed because the definition, let's mute our mics. Let's mute our mics. The definition for guaranteed and for the interest rate implicit includes both the guaranteed and the unguaranteed. Hello? So that's why, let's mute our mics, please. So that's why Visa future value 170. Because the definition, anywhere 5. So topatana interest rate implicit was 16.033%. Then muvunzo wachi kuti chiti calculaterawo the right of use asset kana kuti the lease liability. So can calculate the right of use asset team. We know the right of use asset is determined from where? From the present value of the lease payments in accordance with para 26. Yeah. Team. So ndakungonoisa ma inputs angu kuti PMT 220 is kuchinja. But mukatarisa for the purpose of calculator lease liability, future value is 120 and this kushandisa 120, 170. Maone reka difference. Please, I don't want you to miss that. For the purpose of determining interest rate implicit, if it's not given, I include both the residual, guaranteed and unguaranteed, because that's what the definition of interest implicit states. But if I want to determine the lease liability, according to the definition of lease liability, it's the present value of lease payments. And the lease payment in accordance with para 27, they don't include the unguaranteed residual value. Hello. Can show me through reactions. Wanduko first chat up. It's fine. Thank you. I can see. Hi, Chido. Oh, it was a reaction. It's fine. Thank you. So, please, those are the key things. Those are the critical things. Those are important things which you should take into consideration. Do you have the understanding? Let's go to the next required. A basic one. LC, isn't it? Let's see. CA is the 31 December financial year. On 1 January 2019, we entered into a 5-year lease term for building with an option to extend for a further 3 years. Team ndopanda kuendesa kupara 19 yati the option to extend, should we include it or not? Ndopara 19 but to consider pane economic benefit which is going to arise from that. Do you still remember? Yandazokuendesa kubeach 37. And then saka the option, it's an option. Then over that, the lease payments are 250 per year during the initial term as well as during the optional period, all payable at the end of each year. CA made the payment of 15,000 to the agent who secured the lease on its behalf, and a non-refundable deposit of 32 to the lessor. The lessor reimbursed the CA 8,000. But at the commencement date, CA concluded it is not reasonably certain to exercise the lease. So if we are reasonably certain not to exercise the lease, team, anyway, the 5, confirm. If we are not certain we are going to extend, anyway, becomes 5. Had considered the option to extend. Is it making sense? Then, tovatenda ku PMT wedu taudzwa, we are going to pay 250,000 each year. Then we go, do we have future value? Any residual value? If it's not given, no. Then I go to my I. I is interest rate simplicity. If it's not given, I use the IBR, which is 10%. So let's quickly determine our PV. What's our PV, team? Please, my amounts are kumberi. Prepare the correct things. So up and apply. I'm just applying my para 26 up, team. Autumn calculation yandaite. I kubva musoro mangu ndangoidzura up. Ona zvandangoita amuvhunzwe zvinhu zvisiri mustandard, team. Up. Initial measurement of the lease liability at commencement date. LSC shall measure the lease at the present value. That's why ndatsvaga PV yandiri kuti calculate that are not paid. Please don't miss this part that are not paid. So dai tanga tiri kuita ma prepayments, team. Anyone apa angadai A4 if we are making prepayments, but here we are paying in arrears. Then another thing, the list which is discounted using interest rate implicit. If it's not really, let's use IBR. That's what I simply applied up. Mazon, happy? What do we get? What do we get if we calculate quickly? What do you get?
947.
947. Let's round it off. 947. Hello, please let's calculate.
697.
697. Maanza and Shandisa team.
So 697.
It's what?
697.
How's it? 947. 947. Hello.
697.
947.
697.
697. All right. So the first journal rangu ndakutotanga right of use asset up. Ngupabata team, which is your 947 697. Then ndakuto creditor chi lease liability. That's my first journal. The apply first para 26, then para 24. Ndokune corresponding journal entry rangu. Ndizoka, that's the first thing. So lease liability inenge yatopera pekutanga. But ndakuchidzokera kupara 24. Anditi mukatasa para 24 iri kuzokontinya. What else is included in the right of use asset? any lease payments at the commencement, any initial direct cost, etc. less lease incentives. Mukupona saka ndakutongo continue. Ndizvoka vataura. So ndiri kunzi inini ndakabhadhara imwe mari 15,000 mukuiona here on behalf then ndikabhadhara imwe 32, let's add, then ndiri kurimbeswa 8,000 mukupabata timu. Saka ndakuti debit right of use asset in brackets ndikuiti 15,000 as initial direct cost plus 32,000 pobva panzi less any lease incentive minus 8,000 the incentive. What do we get? 39,000. Confirm. Your credit chii, it's not lease liability because if these were payments being made, I credit bank. And wasara vunza, please, usasara uchinzwa kubirirwa. Hello? Don't make sense there. So initially, then in reality not initial measurement, we go to what you call subsequent measurement. We go to subsequent measurement. And so subsequently, team, when we are subsequently measure, what's key? What's important? So subsequently, takuno depreciate the right of use asset. So no particular debit depreciation in terms of our para 29. This is 947 697 divided by 5 team, by 5 years. Let's divide by 5 years. What do we get? Quickly, let's divide by 5 years. Let's divide by 5 years. What do we get?
189,539.
All right. Apezra utaura chingopedzisa 180 1
189,539.
189,539 like this. Ndizvo. Tobva tacredita accumulated depreciation. Ndizvoka. Ndoda kupedza malease faster. Tiende ndoda unobata IFRS 9 futi ndichienda. Ndizvoka. Then next thing ndoenda kupara 36. Ndakuda kudila nesubsequent measurement ye-lease liability. So lease liability chikwereti icho.
Oh, I Chris.
Yes.
What now say 39,000 here papa depreciation now.
Please, let's add 39. Thank you. Let's add the 39,000 because it's debit right of use asset, debit right of use asset. Thank you for that. Let's quickly add.
Sorry, say Chris, ndaita Skype up pama 39,000.
All right. Para 20. Let me quickly open para 24 for you. Uiona. What makes up the right of use asset? This one. Number 1, tine the initial measurement of the lease liability. Ndio 947 if treated up. Then number 2, you bet any lease payments made or before the commencement date less lease incentive. Then see you bet any initial direct cost upon any initial direct cost. And is it? So for any initial direct cost ndo atakuchitarisa pa question yedu taudzwa kunzi tichabhadhara imwe 15,000 tichabhadhara imwe 32 to the lessor but tichareimbeswa 8 which is less ndo yanzi less saka ndati 15 plus 32 minus mukunyatsoona kuti team ndiri kuzvitora as is in the standard. The reason why ndiri kunyatso emphasize on the standard team ndiri kuti munhu haafanho kubuda asina 50 kuexam iwo ine standard tinenge taremererwei. Alright. So ndoda kukudzidzisa haupinde nemaslides, haupinde nemanotes, unopinda nestandard. Saka maona ndiri kunyatso kushandisirai the standard. Ndoda kungokudzidzisa kuti how can you efficiently use your standard in the exam in the shortest possible time. Musatye kuvhura standard kana waomerwa. Mukubabata here team. That's what I'm teaching. Ndo zvinhu zvandoda kukudzidzisai. Alright. Then so yabva yaita depreciation taatesa ndiri So what's my depreciation? Correct now? Correct amount.
393.
1
97.
Mhm.
393.
393. Ndiyo andinobva ndangocredita kuaccumulated depreciation. Please don't forget this is subsequent measurement. Ndizvoka 197,393. Then ndakuenda kulease yapara 36. Lease liability chikwereti chinoattracta interest on loan. Saka ndakuti 10% of 947 inosara iri 947. 10% handiri kungobvisa koma uko team ndizvo here. 70. Confirm. Then your debitor lease liability. Your debitor lease liability. Andisa ndaziva kuti i-amount ipi kana ndichaicredit. Ndocredita bank because ndinobhadhara PMT ye250,000 uyo PMT wenyu. The difference inoreduce the lease liability. Ichi ndipewo the difference. Pane maprinciple andoda kubva ndatobata ekutax ndobva ndabata cash flow. Ichi the difference. Make it faster. Hatina nguva. Calculator team.
155,230.
155,230 like this. Wapid. Azone. So vakakuti team vaigona kukuti titiro for 2020. Please muna 2020 ndiringokontinya depreciation na accumulated depreciation. Then finance cost yangu team. Ndopa unofanira kugona kushandisa calculator yako zvekuti amorti zviya. Ani munoziva zvekuti amorti yetu. Kuti uzive the finance cost yemu yetu. Payment haichinje. Lease liability. Interest yemu yetu. Please. Ngatigonei kushandisa. That. Happy days. Questions? Questions, team? Questions. No questions. Let's proceed. Then, ndabva ndaisa kamwe ka question aka. So ka question kedu team ka continuation kezvatabva kuita apa. Assume the same facts as in above. Ndizvoka? During 2019, CA made significant modifications to the leased building. We made significant changes to the leased building. Such modifications were not anticipated on 1 January 2019. So, zvaitika during the year, an evaluation undertaking on 1 January 2020 reviewed that it would take 5 years to recoup the cost of these modifications. Tanzwa chirungu here team. Chirungu chabatika here apa. Alright, just 1 minute. Go through again. Unopanzwisisa. Go through again. Go through again. Go through again. Go through again. Let's quickly go through. Go through again. Go through again. Are we done? All right. So let's do so to continuation. So team chicha kutrigwa apa. Vakutriga inonzi lease reassessment, please. Lease reassessment. Why? Takatoita lease yedu musi wa 1 January. Tikatoita zvatacalculate padenga apa team. Izvi zvatatokalculate izvi zviri correct izvi. Mukubabata. Zviri correct zvataita izvi. But vatazoona kuti tanga tiine option to extend by a further 3 years. Team kune yatinoti law of contract. Law of contract team makadzidziswa ku law of contract. Munhu anditi you can only extend with 3 years. Then inobva ndaona kuti pandaita ma-improvements. Ndapedza ma-improvement after 1 year because ndamusa 1 January 2020, which means according ndasarirwa ne4 years. But zvobva zvanzi kuti ndirecover ma-improvements andaita ndiri kuda 5 years. Yet ndasarirwa ne4 years. So takuchidzokera papara 19 pe-economic benefit. Tichangobva here team taita ma-improvement tisina kurecover mari yedu. Hello? Can you see how B37 comes in now? Can we just live without recouping or without recovering what we have invested? Is it fine? No. Ndo patakuchinzi apa ndo pawakufanirwa kuconsider kuti saka lease term yangu yoramba iri 5 years here kana kuti I should consider the option to extend. Hello? Hello team. Is it making sense? Should I consider the option to extend? This is good test up. What do you think?
Yes, you should consider. Makosta akangoendera mahara.
Angangoendera mahara. And the team, haizi guesswork. Izvo zviripo up mustandard mako. Ukadzokera papara 18 up. Vatonyatsokuudza. An entity shall determine the lease term as the non-cancelable period of a lease together with both the periods covered by an option to extend if the lessee is reasonably certain to exercise that option. Then para 19 of that, those you are saying that lessee is reasonably certain. No parguns anofanirwa consider all relevant facts and circumstances that create an economic incentive for the lessee to exercise the option. Saka the option yacho ndo yabva yauya yekuti ta-extenda, taita ma-improvements. So the question tosiya here because tasarirwa ne4 years tisati ta-recover, because in other words vari kuti tanga tashandisa the first year which is 2019 ndizvo. So which means the other period the other period team ya 20 tatova muna 2020. Saka tasawa ne4 years, but tirikunzi isusu patapedza tiri kunyatsoasesa, tiri kuona kuti we still need dzimwe 5 years kuti tirecover. Pabatike here team. Then wochienda ku B37 inobva yatipa ma-circumstances ekuti where there is an economic incentive and all other relevant facts. Saka here team tiri kufanirwa kuextend, but mukatarisa tiri kunzi tiri kuda 5 years. Haukwanise kuenda kuna leso womuti inini saka chindiwedzera 1 year ndibude pa6. Hamena zviri kumeka sense. According to the agreement, ndakanzi I can only extend with a further 3. So it's either you're taking the 3 or woramba uri pa5 pako. Ukati ini ndiri kuda 1 chete kune chinhu chinonzi counter offer kana makamboyi from your business law. Mukupabate here team. Saka apa uyu it's certain anofanirwa kutora dziri 8. Zvameka sense? Which triggers IFRIC 16 para 39 pakuda kuitwa inonzi a reassessment of the lease liability. Ndo apply which para 40 if there is a change in lease term. Para 41 yobva yatondiudzira unofanirwa kuita sei. A lessee shall determine the revised discount rate as the interest in the lease of the remainder. For the remainder of the lease term. Saka ndakuya team. Ndauda kucalculate revised lease. Saka ndakuya ndosvika any wangu up. Remainder yachi team. Andi 2019 tamushandisa. Any wangu 7. Ameno handiri kumeka sense. One repabva kuti eno wangu a7. Because the first year I've already utilized the 2019, I'm on 1 January 2020. So ndo pari kunzi nepara 43, the remainder, I hope makavhura para kustandard patira. Ndizvoka. Then, ndobva ndaenda ku PMT. PMT haana kuchinja. It's still 250,000. Ah, is it 250? Please, ndodangotora watashandisa. PMT, it's 250. Then, ai wangu team. Hanzi ndoiza ai upi. Mapabatawo herepai. Revised, which is 12%. Andishandise mukupabata team. Ndozvataurwa izvo. In applying para 40, LSE shall determine the revised discount rate for the remainder of the lease term. Then, over what ichi, what's my PV team? Please, what's my PV? Ndipewo PV up. Don't forget izvi ndikuzviita musi wa 1 January 2020. This is 1 January 2020.
PV 1,140,939.
Yeah, nditangidziro that amount. It's
1,140,939.
1140.
939.
939. 1140,939. Team, please.
Yes.
Revised the lease liability. Handitaudzwa nzi ndio inowekwa nepara 39 up. Manzo here team. After comment, LSE shall apply. LSE shall recognize the amount of the remeasurement of the lease liability. So the question is, but over what? An adjustment to as an adjustment to the right of use asset. So team, andaweka it's the lease ndingoti ndo chikwereti chandinacho for the 7 years. But for the 7 years dzasara. So ndoda kuona kuti remeasurement yangu. Yes, you can proceed. Is there someone I have a question? Cannot munanga mute any mistake. All right, let's proceed. So team, ndo ya the remeasure tuti ndo pane chikwereti. Saka ndoda kuona kuti chikwereti changu chawedzera nemari team unodzoka panapa. Handitati continuation. Chikwereti changu chatanga chiri pa 947. Please ndikuda answer it. Toda kudzika nayo kuzasuku. 697. Mukupa battery team. Yawedzera nei amount iyi. Ya reducer ne 155230. Mukuzviona here team. Chii chimwe chino reducer ya reducer ne 155 inosara yapa mari. Taurai nini? Inosara iri pa mari.
792,467.
Team ndiri kunyatsonzwikwawo here. 79 chi? Ndangonotora yakanzi lease liability because pane iri credit pane iri debit saka zvino minusana. 79 chi?
792,467.
467. So ndoda kutora this amount yo 792 yeyo 467. Ndakuya ndosvikomudeducta up. Ndakuti minus 792,467. Ndo the amount yawedzera chikwereti. Chawedzera nemari. If I deduct from 114. That's increase in lease liability. Lease liability rawedzera nemari.
348,472.
348.
472.
472 like this. Manzi this. So chikwereti changu chawedzera ni and there wabva once. Mari. Ya unofanwa kubva wawedzerawo nayo right of use asset. Ndo zvataurwa here nepara 39. And as an adjustment, the remeasurement of the lease liability should be as an adjustment also to the right of use asset. Saka ndakuda kunoziva kuti right of use asset yangu so far rimbori pamari. Ndodzokera futi kudenga uko kwandaiweka uko. Yatanga iri pa it was 947 usho. 947 697 plus 39,000 minus the depreciation. Yange ya depreciate ne 197,393. Imari. Hello.
789,574.
Alright, mirati bata inyora kuno. Kuyapachi 7
789,574. Yeah.
574 like this. So team, maonere initial measurement. So jono randrungoita. Ndichati debit right of use asset with the 348 wedu. I3G 348,472. 348,472. Maona kuwedzera kwaraita. Sorry. Debit right of use asset with the 348,472. No credit lease liability. Lease liability team rangowedzera the excess ye 348 usho. Mapanzwisisa. Ndo journal riri kudiwa naexaminer. Ndo remeasurement journal. Then ndaku subsequent measurement. Ndaku depreciator. Chandaku depreciator it's 78 usho. Mukumono. My 789,574 over the remaining 7 years. Ichi ndobva ndacredita accumulated ichi depreciation. Inotipa chiti. What do you get?
Chris, I have a question.
Yeah.
Depreciation tinongotora carrying amount right of use here kana kuti tineta kutora taeda kuti right of use yedu tikaeda increase ye lease liability yedu ye 348 the total amount yatozowana ndo yatinodepreciate kana kuti tinodepreciate carrying amount ye right of use.
Munenge maeda tinoona handiti paitika change in poli handiti tatanga tati 947 ngapa plus 39 ngapa tafadzwa minus 197,393. Saka ndiyo inodepreciatewa iyoyo. Wapabata. It's like taita change in useful life. If there is change in useful life, we not depreciate the carrying amount over the remaining useful life in terms of IAS 8. If there is a change in estimate. Wapabata retafatso.
And no nyatopabata, can you repeat again?
All right. If there is a change in an estimate, we depreciate the carrying amount over the remaining useful life. Wapabata. Ukuti haina kuedwa, hatina kuedha here team. All right. Also, I get you. All right, I get you. So it's plus patati debit right of use asset up. All right, 348. All right, ndazvinzwisisa tafadzwa. Ndachifunga kuti taiedha pandaedha kudenga kuya. Mapabata team. Then for the lease liability, which means in the the total yacho over 7. And the total is the 2. 7 will plus 348 divided by 7 years. No, your depreciation, we credit accumulated. Then for the lease liability team, takungo got 12% of the 114,939. Mapabat. Do you note debit finance cost, credit, debit lease liability, credit finance cost. I think IAFA handed. IAFA got him. Hello. IAFA handed. Let's see. Apay handed. Then when you are dealing with the leases team, if you go to ininda kavandaenda kuna leso but ndombosiya leso apa handed team. If you go to my cheat notes now, if you go to my cheat notes, ndakabva ndanobata this principle is well aligned. Ndakadila nayo in detail. How do we deal with this issue? The classification, the three-party test. So the three-party test, yandanga ndichidila name ish. mukazotarisa zvinhu zvakanyanyokosha i-identified asset, economic benefits ne-right, because contract period of time, period inonyanyodiwa kumeasurement, ndizvoka. Then kubva ndaburitsa that aspect, but pandinodawo kuratidzai team, how do we link it kuaudit? Ndizvoka, how do you link it kuaudit? So ndakabva ndaisa kuzasi kunoku, handiti issue yeaudit, handiti ndakuiintegrata kutaxation. Chii chainosiyana kutax? So kutax team, malease isusu tiri worried nethe lease payment, the PMT. Iyo finance cost iyo inofanirwa kuedwa back. Munofanirwa kuziva kuti finance cost is an accounting entry, hairecognizwe nataxman. Taxman anoconsider your lease rental. Toita sei initial direct cost, the capitalized right of use tax may be treated as deductible, maybe. And then ndakabva ndanebata ku non-cash items reconciliation kana waku tax, right of use depreciation, interest accrual on the lease liability remeasurement, unrealized exchange gains or losses, dismantling provision and winding kana uchita tax reconciliation. Ndizvoka. Then ku deferred tax common lease pattern kubva ndaisa maart. Then VAT traps team, input VAT is not recognized as part of right to use assets if recoverable. Then ndakabva ndaibata kumanagement accounting inoaffecta chii kune the lease iyaya pamunete inonzi NPC, pekuti is there an option, should we lease, should we borrow, or should we buy? Should we lease an asset, should we buy? It can affect IFRS 16 integration yandiri kubata iyi. Kokuma ratios inoaffecta chii? Ndizvoka. Then ku-audit team, what can go wrong in terms of the risk at accession, right of use asset omitted, lease register incomplete, contract treated as services, embedded lease missed. In terms of existence, contract might have expired, cancelled. In terms of valuation, incorrect PV, direct cost, incentive, restoration. In terms of the lease liability, what can go wrong in terms of risk accession? Then koku substantive procedure, ndakabva ndarova the substantive procedure yacho up. Mukwaona, obtain management lease register, reconcile to the general for what? Review board minutes, etc. Vehicle, ndikubva ndaisa documents are relevant. Copper existence, inspect signed agreements to confirm commencement date, enforceable period, rights, confirm significant lease terms directly with the way risk is high. Then in terms of valuation, what can go wrong? And but it's fine because of time. Do not timbobata the IFRS perspective. The IFRS perspective team. Are we fine? Happy days. All right. So let's see. We are done with let's see. So man, this is about let's see and it was 18. Happy days. So can we go to Dombosia Leso? Totaga time. Let's go to IFRS 9, IAS 32, and IFRS 9. Toita leso here argantang ndaenda ku IFRS 9 team. Tichinje zvi kuramba chingoti list izoga imbobata lesi for tonight. The thought process you can apply it kunachi kuna leso. So ndauda kuenda ku IAS 32 kuma leases. So team must stand kuma financial instrument. Every standard you need to understand kuti standard renombo structure say. So if I'm dealing with this one, I start with my IAS 32. So I've opened the IAS 32. I also have to understand my IFRS 9, which means I want to open IFRS 9. So chakutanga ndiri kubvira ku the general appreciation team. I want to start with the general appreciation. So let's have the general appreciation. So the first question is, team, when can we say we've got a financial instrument? That's your para 11. So this standard is, gainditanga ndari summarizer in detail ndozotanga kudzika step by step. Number one, kune classification of a financial instrument iri ku IAS 32. Please, ku IFRS 9 hakuna classification. Most students confuse this part. Gaitibva tatongoenda to the part yacho. Let's admit those in the lobby. Olam wangu avharirwa panze. All right. Are you in Olam? Angajinda jona ku WhatsApp. Message WhatsApp achiti ndikusarira panze. Hi Olam. I think network yako handini kana simo. Ndikuona ndofunga. All right. So what's key, team? What's important? Please, IFRS 9 hakuna chinonzi classification. Please, students mazhinji akanzi classify financial instrument vanoya up. Team, ndiverengereyo up. Mukanyatsopaverenga up. Chapter 4. Pari kuti an entity shall classify financial assets as subsequently measured. So it's a classification for subsequent measurement. Yekuti iri at amortized cost here, iri at fair value through OCI here, if fair value through P&L here, ndo iri kutaurwa up. Team, ndabatike here team. Olam, are you in? So that's the class. Yeah, is the classification yekuti asset here, liability here, equity. It's not that classification. Please, if I want to deal with the classification, so that is standard rega rinotanga the classification, which is my IFRS IAS 32 from para 11. So para 11 team ndo pachatiburitsira kuti what is a financial asset? What is a so kazhinji asset team ingoya utore definition hainetse pane nyaya liability neequity ndo zvinowanzonetsa. What's a liability? When can I distinguish between an asset ne-liability? Or where this? So you can write definitions. Are good definer chinosiyanisa assets ne-liability. It's a simple thing, team. Asset ne-liability zvinosiyaniswa ne-one simple thing. If you go to the definition, kana iri asset, iri liability, sorry, why not there is a contractual obligation to deliver cash, kana team. Otherwise, equity is the opposite of a liability. Then, what about to what? To para 11, class to deliver cash or another financial asset or exchange with another entity under conditions that are potentially unfavorable. To equity, kunongweta the opposite team. Kurgunzi in asiri favorable, iyakuti that are potentially unfavorable to the issuer. Then, the next part, team, the instrument rinogona kuzoitwa settled in the ended only equity instrument. Tichagona kuzobhadhara using the ended only equity instrument. But we are going to pay using the ended only equity instrument. If I'm going to pay using the ended only equity consideration, if I'm paying using the ended on equity instrument. So the first question, the equity number one, get this right. It's a non-derivative in which the entity may be obliged to pay using variable. Then the two yacho inovati not fixed. So we are only paying using variable but not fixed. And if you go to the equity instrument, it's just the opposite. Irungoti isusu enande payment of variable, but the other two yacho bank fixed. Make sense here. So chiri kusiyanisa from the basic definition ye equity ne liability. Pane number 1, the cash avoidance test. Can we avoid paying cash? If I can avoid paying cash, then it's a what? It's an equity. If I cannot avoid paying cash, yala. Upon this is a rating. Then number 2, another thing which can distinguish the two, it's when we are paying the instrument using our own equity instruments. If we are going to pay using variable number of shares, yeah, liability. If we are going to pay using fixed number of shares, yeah, equity. That's the critical thing. Kana ndichidhila nei anasarere tibatsirane anasarere tibatsirane.
Hi, can you please come again?
So what's key? What's important? What are we going to pay with? Are we going to pay with our can we avoid paying cash to the issuer? If the answer is yes, if we can avoid paying cash, it's equity. But if we cannot avoid paying cash, it's a liability. Then it can be settled using our own equity instrument. Then on equity instruments, again, the question is, are we paying using fixed number of shares? If the answer is yes, it's equity. If we are going to pay using variable number of shares, it's a liability. But no patinotra fixed for fixed, variable for variable. So ndo pane nyaya chete team. But chinozoitika muexam. So that's the classification, please. Then let's go to recognition. Recognition team, aika 1 paragraph chete. Tangoenda ku chapter 3, dokune recognition ne derecognition. So if you go to chapter 3, do you know to the initial recognition? An entity shall recognize in its statement when and only the entity becomes party to the contractual provision. So you just prove there was a contract A, B, C, D. But uchibva chapter 3 team, they take you to chapter 5, not to chapter 4. Get this right. Chapter 5, yakukudza yatinoti the initial measurement. Please, which is your chapter 5. It's the initial measurement. So I could except for trade receivables within the scope of para 5.13. Initial and entity shall measure a financial asset or a financial liability at its fair value, plus or minus in case of financial asset or financial liability. So, chi plus or minus the transaction cost, but varikuti not at fair value. So in simple terms, team, ndatotanga kupiwa jono rangu rekutanga. If it's a financial asset, I'm going to debit the financial asset. Ndizoka. But avanangogumira ipapo ndo credit achi. I'm going to credit the bank like this. But pane zvavataura, what you should credit, debit or credit with its fair value. So the moment they yakati fair value, varikuti ndi calculate, ndakutofanwa kuisa ma inputs. N equals to chakati yes. PMT equals chakati. Ndizoka mukupabata tim. N wangu it's vatoda kuti ndise ma inputs because that is the fair value. So how your fair value? That's your present value. Do you make sense? Hello? What voice a future value? Yeah. Mukuonera kuti zviri kutotaurwa kunzi weka izvi. Apa papara 5.1 apa. Pavari kukutiwo tikuda the fair value of. How do you determine the fair value? Ndo thought process inofanirwa kuya mumind mako here. Then I wedu ichi. Then we calculator your PV. They are kunzi the fair value up. Your PV, that's your fair value. Questions. Can I explain it further? So your PV, that's your fair value. But mazona vatozvitaura. Then number 2, kana wadaiso wadetermine which is your debit, your financial asset, credit bank. Then kana iri asset vobva vati plus the transaction cost. Saka transaction cost uchati debit financial asset, credit bank, because you know the transaction cost team ibank riri kubatira mari kuti pawakaita the transaction, saka it's a cash outflow of the business, so we capitalize it. Then on the same token vari kutokupawo journal reliability up. If it's a liability, debit bank, credit financial liability, kana musi kuzviona bvunzai team. Then ndoana say the financial liability, ma inputs angu mamwe chete, n equals to chakati, pmt equals to chakati, the same inputs, but the transaction cost now, if it's a liability, I debit the financial liability, ndizvoka, then I credit bank. Haiti pana rikono here kuti journal randaita rakanyorwa apo kana kuti hamusi kuriona. Journal tiri kuriona here apa. Can you see the journal narration? But there is something chiriki chataurwa team. That is we plus transaction cost minus transaction cost, unless team, if it's measured at fair value through P&L, ndoziva say kuti if fair value through P&L, ndoziva say it's at amortized cost. Saka team, I can't complete this part kuzoita journal transaction cost. Ndisati ndadzoka ku chapter 4. Amene hazviri kumeka sense. So chapter 4 ndopavari kundudza the classification. So it's a classification for subsequent measurement. Kuti ndizoziva kuti it's not at fair value through P&L, it's not at amortized cost, it's not at fair value through OCI or amortized cost. Maona zvakaitika here kanyorwa kakaitwa standard team. Kana kuti tiri kutoraswa nestandard racho. So please, let's get the wisdom yekuti standard rainyorwa sei, because vamwe vati kovaidi ngonyora ka1 team vatokupa mareference. So ukatarisa, let me prove to you kuti vari kuti before I complete chapter 5 dzoka chapter 4. Chapter 4 yobva yakuti an entity shall classify financial asset as subsequently measured at amortized cost, fair value through other comprehensive income, or fair value through profit or loss, on the basis of what? Number 1, the business model for managing the financial asset. Then 2, the contractual cash flow characteristics of the financial asset. Then 4.12a, yochi 2 dot, when can we say this is at amortized cost? Amortized cost number 1, chino the business model team. The business model yedu is to hold. Pane mistake inoitwa nemastudents. Vanofunga zvikanzi to hold. Instrument iyo inofanirwa iripo for life. Team, ndogona kuissue an instrument for 5 years. If this instrument is going to be for 5 years, ichizoredeemwa after 5 years. Team, kana ndiri kungoimirira kuti 5 years dzikwane yoredeemwa, my business model I'm holding. Mapabate here team. Hazvireve kuti hariredeemwe. That's one mistake which is made by students. They think if it said it's going to be redeemed. So to redeem team, according to the agreement, we have met the conditions for the whole contract. The 5 years have lapsed. So we are now repaying back. So it means we were holding until maturity. Is it making sense? Then that's hold. If our business model is to hold, then they clearly specify the other part, the contractual cash flow. There are 2 things. Terms of give rise on specified dates that are solely payments of the principal. So in other words, if we are redeeming the principal at the end of the 5th year and solely interest on the principal amount. So tukuti isusu within the duration tinenge ichibhadhara ma-interest kana angava ma-dividends, but we redeem the principal at the end of the 5th year. Our business model was to hold the amortized cost. Then another aspect they are bringing here, it's a financial asset shall be measured at fair value through other comprehensive income if both the following are met. Number one, this one is held with business model whose objective is achieved by both collecting contractual and selling. So Trikuti, we have the instrument for the next 5 years, but pakauya munhu anokwanisa kutitengera that instrument at a price iri good, tinombotengesa chero 5 years dzisati dzakwana dzekuridhima. Hello, is it making sense to him? Iyoyo ndiya, other circumstances vanokuti it's held for speculative purposes. And in other words, the moment something is for speculative purposes, which means if someone comes with a good price, we can sell. Do fair value through OCI. Then over that, can isiri kuzomita both the two. If it does not meet 4.12 ne 4.12a, ya fair value through P and G L. Saka vakubirire mu exam, please. Happy days. Olam, are you in?
Yesenda vamo azikuita.
Wajegera. All right, it's
Yeah,
fine.
baba kashata.
All right, ndachiona kuWhatsApp kuti munhu ari kuzi akuti ndanzwa nekusara. All right, so let's proceed. So mapabata the business model, then there are certain circumstances team handisi kuda vachazobuda vachiti he zvanga zvakafanana, wanga uchishaya kuti iamortized here ifair value through OCI. Team hazvifanani, unenge usina kunyaso understand 4.12 and 4.12a. Please understand. Then it can be business model, it can be to hold. But think about the Zimbabwe situation here, ma-rates edu aichinja. Team business risk, credit risk ikaincrisa, ndoona kuti kukwira kuri kuita rate, ndikaramba ndakachengeta iyi mari yangu inoenda kuzero. Let me sell. My business model was amortized cost, is to hold. But because there is an increase in credit risk, I'm forced to sell to reduce the risk yekuluza value yangu hazvichinje business model. Inoramba iri at amortized cost. Intention haina kuchinja. Mukupabate here team. There is no change in intention there. So understand the difference between the two. Then, so mukachitarisa team, this aspect, vari kuti pauchaita chapter 5.1, unofanwa uine that in mind. Pauri kuita apa, pavari kukuti it's plus or minus transaction cost. So E, if it's at amortized cost, this journal renote if it's at amortized cost or fair value through OCI. But kana isina kumita kana iri fair value through P and L, transaction cost expenswa, we debit transaction cost. And is your credit achi bank. So makutoona mind ya examiner akutouya ipapa ndo paanotorera nyaya dzake ipapa. And that's when the examiner consider these things, ndo paanotoona kuti apa hamusi kuziva bambo kana kuti muri kuziva. And that's the key. So mukatarisa team, so that's the flow of IFRS 9. But in an exam, if I'm in an exam, get this right. If I'm in an exam, what's key? What's important? Ikapiwa an instrument, pane information yangu yandandinayo yakuda kundirasisa kuti ndakuishaya kuti iri pari. All right. FINAC. Yeah. I think I've to my small scenario twangu. All right. Can you quickly see that one? Let's go through that one. Let's quickly go through that one. Ambobata the classification. I remember pane munhu akambondibvunza, there was a question yaida review. Olam, are you the one? Akambondibvunza, there was question yaida discussion yaida kucorrectwa. If you still remember that past paper,
Yes,
like, can you share that with me? I want to share with chat. Toda kubata dauzoratidza vanhu a review. Tiratidzane the importance.
okay, let me check kumachat edu kana richiko.
All right, it's fine. All right, I just want to show. So, team, ukapiwa financial instrument. The greatest mistake inoitwa nema students kuda kunodiscussa the instrument rese ka1. Please, instrument ngarisplitwe mukupabata. Remember that you can split the instrument. Ndofanirwa kurisplita in terms of what, team? The instrument rangu ndofanirwa kusplita in terms ye ma-options ese aripo pa-instrument apa. So tine CA manufactured on 1 January the company issued 100,000 convertible preference shares. So ndine yandinoti the capital amount issue inodiscusswa payega. Then pane the option to convert into shares inodiscusswa payega. Izvoka? But this instrument riri kubhadharwa a fixed annual dividend. Pane dividend rinodiscusswa paro rega. Ameno team, ndabatika here. I can have different conclusions. So how combine your discussion? This is a team. I need the capital amount. So if I go like here, the capital amount, my discussion, we issued the convertible. That are convertible at whose option? That's another thing. They are going to be converted at whose option? Is it the issuer or the holder? Who has the option? Taudzwa up. They are convertible at the option of the holder, not the issuer. So, team, the first question, ndikuda kutanga ndadila the issue aspect yekuti CA is listed company with a reporting ndizvoka. So pane ma preference shares ane the option to convert but at the option of the holder. So the question is takuti ini consider tinoti the cash avoidance test mainzwawo. Kana holder ariye ari kudecide kuti ndiri kuda cash here kana kuti handidi cash. Night team, can we avoid paying cash if the holder elect? Can we avoid paying cash?
No.
No.
So, saka ndatone conclusion yangu liability. Mukubabata here team. Liability. So which means kanda kutodiscussa mu exam ndikufanira kutoya ndotanga ndotora principle yangu up papara 11 inoti chiipa definition liability. Iri kuti a liability is where I have a contractual obligation to deliver cash or another asset to another entity. Ndo chekutanga chaufanirwa kutiudza padiscussion yedu. Izvoka? Then two, sandut a liability arise if I have to deliver cash in ex-ante. So the capital, the obligation to redeem the preference shares are convertible after 5 years, but at the option of the holder. So if the holder does not convert, are obliged to redeem. So the question is, CA wedu an unconditional right to avoid delivering cash. So if the entity does not have an unconditional obligation to avoid settlement in cash, this is classified as a financial liability. The discusser ish. Maona kutorwa kunoitwa ma-max team. The discusser, the capital portion ish. First. But next, pane the option yekuti ko akasa redeemer achagona kuti chi ndoda kuconverta into chi shares. Wakudzokera futi ku instrument inzwai team zvinhu zviri mustandard ishi up. Akadecide kusapiwa cash which means akuenda kubika ari kuconvert. Pakuconverta wakunzi zvibvunze kuti anofanirwa ari kuconverta into variable here or fixed number of shares, B1 or B2, not fixed number of shares. Saka takuenda to the option to convert team. Pa option to convert ari kuda kuita sei conversion to equity. Ari convertwa into what team? Ndati totanga ta conclude inzwai. Ari converter into what? Akachuza convert into fixed number of 100,000 ordinary shares. Mazvoni? Team ndati maanza ese anenge ari muexam. You can convert into 100,000 shares. So if I can convert into 100,000 number of shares, which means ndakutouya kustandard rabva randiudza kuti if I am converting into fixed number of shares up, ikaenda kudefinition kweequity, it meets the definition yeequity papara 16 up. It's not variable. There's no contractual obligation for the issuer to deliver a variable. Or vati patu yacho, it's fixed up. Saka ndatoconclude it's equity. Saka ndaconclude kuti it's equity ndakutobvira apa. Definition yangu ndakuchibvira pekuti the holder has an option to convert into 100,000 ordinary shares. Then the conversion option meets the definition of derivative. Why? Its value changes with the entry share price. So in terms of 3216, equity, a derivative classify only as equity if the amount is fixed and if the amount is not variable. So in this case, the capital amount is to be converted into fixed number of ordinary shares are 100,000. So in conclusion, the option here is fixed for fixed in terms of our IAS 3216. Therefore, it's classified as an equity. Don't you know about the dividend portion? Make a sense, called dividend. Dividend payments are non-discretionary. CA is contractual obliged to declare and pay dividends each year regardless of profitability. Question yangu itu one team. Can I avoid paying cash? Hello? Can I avoid paying cash?
No.
I cannot avoid paying cash. So conclusion yangu ichi. Hello? Standard rine
Liability.
It's a liability. Mazvonere team. Zvoreva kuti varingokuti chidzokera kudefinition yako yeliability kuIAS 32. Saka which part yeliability team handisi kuda part yese yeliability. Apa ndikwe cash. Saka ndiri kuda yekudenga uko. A1. Contractual obligation to deliver cash. Saka ndo patotangira discussion yangu ipapo. Kune vanonetswa nekubuilda madiscussion. So dividends on the preference shares are payable annually in cash. TA does not have discretion over the declaration of payment of these dividends, which creates a contractual obligation to deliver cash. Mukona ndiko apply a definition. So the obligation to pay, since it's non-discretionary, cash dividends constitute a financial liability. Hello? That's how you build your discussion. You see how you build your discussion? Questions before I proceed? Questions before I proceed? So, let me try to take you the other side. So, my journal edu team, if I go to the journal, IFRS 9, Canada so team, the moment pakanzi debit financial assets, upper debit liability, credit liability, debit liability. Team kanandanga garanda calculator PMT, present value wangu. Then kana pakaitika ma transaction costs. My transaction costs can increase or decrease my present value Therefore, if I adjust for that, ndinofanirwa kucalculate yatinoti effective interest rate. So inonzi effective interest rate, the other name for present value team, the purchase price. So vakakuudza kuti the purchase price is this much. The present value is also the purchase price. Tabatika. Tabatika team. That's the purchase price. So these are some of the things which you should take into consideration when you are dealing with IFRS 9. So the trick on IFRS 9, what you understand here, then what you are sharing, I love that paper. Just the general principle, that general principle, the IFRS 9. So the IFRS 9 again, the next thing which affect IFRS 9, my impairment losses, which is your ECL. ECL affect one team. Let me try to open I want to open the module endunamo, which is neutral. I can see my class yangu iri mixed with students from both service providers. So let me use chiri neutral. Chisiri neither of the two. So let me try to open the endunamo one. So not for leases. Let me say I want to show you something. I don't need this one. I need financial instrument. All right. So I need to touch this part team. So can I delane nema asset team? So the first important thing, if it's general, those are not explain. This becomes your journals. So my journal edu, if it's an asset team, we debit the financial asset, nema ariata receiver, we credit bank. We debit the financial asset with the transaction cost, please. If it's not at fair value through P&L, we credit bank. But if it was at fair value through P&L, apapa what debit financial asset wa who debit transaction cost P&L. Then at the end of the year, to recognize a bank interest, to recognize interest income financial asset. Then can any fair value through OCI pano what do you call it? It's fairly valued. So we take into account the market to market reserve. So let me take a quick question. How to calculate pana. So this one here, what you thought is amortized cost. But in the explainer team, the basic journal. So quickly, let's read for 2 minutes, just 2 minutes, 2 minutes. 2 minutes. Two minutes. If we are done, taurai mapedzere kuverenga team. Apply zvandiri kureva.
Yes.
All right. So here in this circumstance, team, on 1 January 2018, CA acquired 1,010% bonds in why team? I will not acquire 1,100 bonds. No. I will not acquire them at 1,800. We acquired them at fair value. So do you agree with me? Fair value havana kukupa. Vari kuti enda kuchapter 5.1 yeku IFRS 9. Ndizvoka? Ndio kukuudza kuti how do you acquire? Ndizvoka? The bonds have a maturity date of 31 December 2021. So the moment they give me the maturity date, vari kungondipa ma-inputs. N wangu equals to 1 January kutanga kwake. So it's 18, 19, 20, 21. N wangu it's 4. Then PMT. The PMT team, it's your coupon rate. It's your coupon rate. So your coupon rate team, it's calculated based on what you call the nominal value. It's 1,000 times 100, which is 100,000. Confirm team. And the coupon rate where it's 10%. Iso ndagone recalculation yangu apa. Hello. What do we get? Ndagone recalculation yangu. Yes. Which is
10,000.
10,000 like this. Then I get my future value. The future value is money which is paid in the future. So it's a payment. Trikunzi, my bonds they will be redeemed at a premium of 8%. So redeem team, it's your nominal value. Please, not say the difference, which is your 100,000 ush. Argu redeem at a premium of 8%. So the premium is anything which is charged over and above. It's over and above the nominal value. So in other words, 100,000 plus 8% of 100,000. Saka ungoti times 1.08. What do we get? 108,000. Confirm. 108,000. Then I understand say historical. I use the market rate of similar instruments. So I take the 14%. Then I get my PV. What's my PV? So your PV team, that's the other name for your PV, that's your purchase price. Please. That's your purchase price. Purchase price. How much is it here? How much is it?
93,082.
It's what?
93,082.
93082 ndo panotangira journal rako team. 93082 ndo paunotanga uchiti debit. Apa it's investment in bonds kana kuti financial asset, but kazhinji be specific. Izvoka 93082 ndobva ndacredita bank with the same amount. Auti panzwike team 93082. Then parunzi tine transaction cost amounting to 1.5% of the uchiripa chapter 5.11 yeku IFRS 9 team. Uri up. Mukuzviona here kuti team zvinhu wakatozvinyorerwa izvi. Vatokuudza kuti ita sei. So ndakutyoti nini 1.5%. Another mistake inoitwa nevanhu team. Ndini ndaenda mutown ndobva ndasvika ndichida kutenga chinhu chiri kunzi 1.5. ndobva ndanegotiata for a discount kuti ndobva ndati shandine 1.4. Ndizvo pandicha withdrawa mari mubank handindo withdrawa 1.4 yandachajwa here team. Bank harindichaje matransaction cost on the 1.5 yandanga ndisati ndanegotiata discount. Bank rinondichaja transaction cost based on the amount I actually withdraw. Ndizvoka? So transaction cost is 1.5 of the 93,082. Ichi team. Make it faster.
1,396.
1396 ndizvoka tobva tacredita futi chi bank ndichiri kungoaplya para mukatarisa tarisa zviripo team except for trade we shall measure a financial asset at its fair value plus kana iri asset its transaction chi cost plus the transaction cost ndo zvandaita apa so pakunzi plus onai plus ari kubudira pakuti debit investment iri kudebit debit futi investment wetransaction cost ari kudebit ndizvoka then team musakangano kuisa kuti isfp here ipndao here please musasiyirire zvinhu izvozvo kana muchiita apa ndiri kuitira hangu time kuti tikavhe zvakati then nekuda kwekuti this 93082 was on 14%, but because there is a change in our present value yangu team, it's now 93082 plus 1396 usho. Ichi team, inobva chi present value. The actual present value, in other words, present value, tuti Maria bhadarwa nhasi. How much have we paid today?
94,478.
94,478 like this. Then aiwedu anobva achinja ena achinja anoramba ari 4 team pmt achinja anongoramba ari 10,000 ndizvoka. Then fv pane mumwe munhu ambondivhunza masigns kuti saka masaini team this is a financial instrument ndizvo tisu tichange tichibhadharwa mukupabata here saka isusu tofanira kungwarira kuti chiri positive chii tisi tinenge taburitsa tichitenga instrument so yo pv ndio iri negative but pmt tisi tinenge tichibhadharwa mainterest omadhibenture mukupabata here team tisi tiri kubhadharwa in future tisi chadzoserwa bheki mari yedu saka kuna vanhu vanoti handizoziva kuti saka positive ichi negative ichi ndabatika. Are we answered there?
Hi, Chris.
Hi, Ota.
So yeah, let's go way to standard on 5.1.
Yeah.
I just opened there.
Let me go back here.
So there you wrote present value is equal to fair value, which is equal to purchase price.
Yes.
So they were given fair value. Why are you not saying it is the purchase price?
We were not given the fair value. Let's interpret it again, guys.
Yes.
Let's interpret the question. All right. Funds on 1 January 2018, CA acquired 1,100 bonds at fair value. Hazvina kunzi fair value ishi. Make sense. 1,100 ishi ndio value yayo mumarket. Ndianambokupa example yagari. Ndichasvika kunzi iPhone kune chiri kupisa mazuva ano iPhone chi itomboti kunzi iri 1 pa 1.5 ndizvo. So 1.5 ndio yatinoti the nominal value. Ini ndosvika ndobva ndati pamwe mukomana aswera asina kutotengesa musiwo ndomuti hasha ndine 1.4 ndio inonzi purchase price guys.
Okay, also the word 1,000 is not the fair value. It's fine, I get it. Thanks.
Iyo vangoti ndotoziva kuti panoitwa mistake ipapa vati 1,100 bonds at fair value. We acquired 1,100 bonds as long as at their fair value. As long as 1,100 it's the fair value. But zvikunzi 1,800 atengwa at fair value. That's why I calculate 93,082. Once this is at the difference.
Yeah, got it. Thanks.
Yeah. So then the transaction. So because of this transaction cost, inowedzera the present value. Saka aiwedu anochinja ndakufanirwa kucalculate anonzi effective interest rate. Let's calculate our revised I. Heavy. Let's calculate our revised I. Please, ndakaiona recently I think Sandar one preparation rukanganwa kuti ichi darishana nanoda kuratidza kune question yakauya ine IFRS 9 ichida review. Pakachemwa ipapo. Fine. So saka ndiri kunyatsa kuitira step by step because it's a favorite yemaexam. And then team saka aiwedu maona chiapa ari revised mazvona ndakuda revised ayapa
18.51
13.51%. So pawakuchita so subsequent measurement team financial instrument subsequently tisita kupiwa PMT yedu handi tisita kainvest here team saka munhu achandibhadhara my coupon 10,000 then ndo credita chii interest income team is an accounting entry. Interest income calculated using the effective, not the coupon. 13.51% of 94478. Diane, 13.51% of 94478. What do you get?
12,767.
12,767 like this. The difference, investment in bonds, capitalized, which is 2767 like this. Apabate team. Go in subsequent measurement. Maona zvinoitika kana iri amortized cost handiti. Pabatike rapa team. But ndakuprovira kuti unenge waziva sei kuti amortized cost, your business model, your contractual cash flows, isn't it? Then let's go if it's fair value through OCI. So apa vatoti vatokudzwa kuti fair value through because ndakufocus only on the journals. So if it's fair value through OCI, apa team ndakuverenga futi again gari. Ona apa. On 1 January 2018, CA acquired 1,100 bonds at a purchase price of 94. So ona vatoti papa. Hauna need you calculate PV pakadaiswa. Saka wakutongotanga nekutoti investment in bonds team ndiri kubatika here team 94,000 ndobva ndati credit bank 94,000 handina need yekutanga yekumbokalculata PV because vandipa itori purchase price. Then transaction costs atodzwa nzi 1.5 ndakuti debit investment in bonds 1.5, credit bank 1.5. Please feel free Pawasar do explain. Then because investment yangu ne mkatarisa apa vatondinyima I ndofanira kucalculate I wangu saka ndakudzoka ndosvikoti n equals to 1 January 2018 31 December 2020. So it's 18, 19, 20. Mukuona how I'm counting team N3. PMT wangu PMT ari historical. So it's 1,000 times 100, which is 100,000 times 9% in 9,000. Mapabate team. Please msamix a PMT na interest income. Please. Then I go to my future value. Future value yangu ndinayo. They will be redeemable at a premium of 5%. So premium is over and above. So it was 100,000. Please don't forget. So maona here another tricky. Premium I add with per purchase price cannot per PV. Premium, we adjust the premium on the nominal value. The premium is adjusted on the nominal value. Happy days. So please, team, feel free to go through the other things per YouTube bank, please. I think Nambo attach. I confirm you can see the link of the YouTube channel. Let's subscribe, please. Let's subscribe. I think I've attached something. Yes, team, sorry, my questions. Let's unmute muchat handisi kuzotarisa. Sorry, I can see maita questions akawanda. Please let's subscribe to the YouTube channel. I think namboisa the link of the VATCGT. Those who did not attend yesterday's session, let's subscribe, please. Let's support by subscribing to our channel. Zvinobatsirawo the next person wokuti azobata wanditi. So ndangoisa hangu link re certain recording, so ukangovhura iroro wobva wangoti subscribe. All right, so let's proceed. So
Hi, Chris.
yes.
Sorry, this is not exactly related to what you just taught, but there's a time when you mentioned about review questions, and I just wanted to ask about the cheat notes on how best we can do a review question in order to earn a lot of marks, because I've realized that sometimes you know what you're supposed to be doing and what is required, but how then do we make sure that we maximize the marks that we are getting on that question?
So whenever you are dealing with a review question, isn't it? The first thing is what was done wrong, isn't it? Then and why it's wrong. So you are going to bring two things out, Rukuzo. For example, let's say I'm in valuation, isn't it? I'm in IFRS 9. Maybe I failed to identify this is it's supposed to be measured at fair value through P&L, isn't it? Then it was measured at amortized cost. So if it was measured at amortized cost, so one thing which is certain, the transaction cost will be capitalized in amortized cost, isn't it? Yet in fair value through P&L should be expensed. So you start by saying it is incorrect that the transaction cost was capitalized, isn't it? On the assumption that it was at amortized cost. However, since it's fair value through P&L, the transaction cost should have been expensed. It's like it's your subordinate wauri kureviewa Rukudzo. Saka uchatanga wamudza zvaita zviri wrong ndezvipi, number one. Then two, what should be done to correct the error? That's a complete review solution point. Another example, let's say I'm dealing with NPV or valuations. Then in error, someone includes your depreciation is included in the calculation. So ndotanga, it is incorrect or it is inappropriate that the depreciation has been included in the NPV calculation. Then ndobva ndataura why it's wrong. Depreciation is a non-cash item and should not have been included. Rukudzo, a complete review question. In a two,
yes.
There are two things.
Thank you so much.
Always remember that. So please, what was done wrong and why? What is the correct? Why it's wrong? Or do that the correct thing? It was subordinate wangu. Next time, I did the same mistake.
Oh, okay. All right. Thank you.
All right. Any other questions? All right. So here, we have got our future value. It's 105. So please, the future value is calculated. It's 1,000 times 100 first. So the nominal value of the instrument is 100,000, like this. Then if I'm redeeming, what is redeemed is the nominal value. Team, all right, we say in simple terms. Rukuti inini kana ndichida unotenga mashares, companies they might discount their shares for the purpose yekuti because vari kuda mari, mukunzwisisa. Woto kuti kutengesa ndiye 100,000 atiri kukupa, but iwo hako bhadhara 90,000 mukupa bate here team. But inini chandatenga naye zvinochinja here kuti mashares angu ndiye 100 nekuti nda discount. Hello? Doesn't change. Saka it's inini ndatenga hangu mashares handinawo mukambani kushare certificate kwangu ya 100,000. But inini for accounting purposes ndoshandisa the actual amount I have paid. Mukupabata team. Ndo ma principles ya accounts. use the actual amount you have actually paid every day. So I use the actual amount paid. Saka ndo saka muri kuona pa that's the principle iri kuitika apa. Anditi saka pandiri kuredeema at 5%, it's 100,000 times 5%, not 94, not 95. What your initial $500 like this. Happy days. Mivunzo. Then we get our I. What's my I, team? Yeah. What's my I? What's my I?
$12.36.
4.
12.36.
12.36 like percent here, isn't it? That's how we take that into consideration. So it's 12.36. So subsequently, team, ndakunoya ndo pandinobhadharwa my PMT izvoka, which is at the end of the year. So subsequently ndakuya, I want to pick something here. Ndakuya ndoskoti bank. Mubank mako mune 9,000. Then team, I should credit interest income. Interest income, it's based on accounting rules, team. It's your own accounting rules. So 12.36 off that amount, what do we get? Of the 95,500. Happy days.
11,804.
11,804. Team, it's your investment. Investment, which is, that's my assumption. Then get this right, team. At the end of the year, on 31 December 2018, the fair value of the bond is 120. My own, it's 120. So the question, what should you do? So you start now determine the fair value. So not 20,000. Minus the 95,500, which is your debit investment of 94,000, debit to investment of 1.5, the transaction cost, plus the 1804. Ngona parubva 1804 ndizvo. Mazvionere team. So it's 120,000 minus in other words, usakanganwe kuedha kuti ayewa investment yangu yatanga iri pa94, vayakapitalizwa netransaction cost, vayadebitwa the balancing figure, this investment. Ndo zvinowanzokanganikwa nema-students. What's the difference? What's the difference? What's the difference? Taurai neni? What's the difference?
$21,696.
21,696. Then I credit my market to market reserve. Maona kunobva market to market reserve, team. So, all right. one difference ingoripo between the amortized and the fair value through OCI issue put it the other one in a fair value adjustment, the other one doesn't have any fair value what adjustment. Other one doesn't have fair value adjustment, other one is the fair value adjustment, isn't it? I think I can see others who would respond chat, please. So please, Anenga knows understand. So iapere. Then the next thing I want to deal with now, I want to deal with impairment. Let's deal with impairment, isn't it? So for impairment team, impairment ingoriyo yamaiti provision for bad debt. If you still remember from your your high school, which used to call your provision for bad debt. What happened? So impairment team, that is impairment framework. So we need to amortize. So Patino amortizer team, what should we consider? We consider this impairment framework. Kunema stages, is it stage 1? Is it stage 2? Is it stage 3? You usually don't perform the stage 3. It's stage 1 and stage 2. So stage 1, it's performing. Then there is no significant increase in credit risk. Then stage 2 is underperforming. There is a significant increase in credit risk. So there is no significant increase in credit risk. There is significant increase in credit risk. That's the difference between the two. So our patinoshan say at not 12 months expected if it's stage 1. Then if it's stage 2, we use lifetime expected credit loss. Happy days. But impairment in my effects up team. Also consider also what if there is an instrument which is disposed. Recognize number 1, market to market reserve. Number 2, recognize the impairment loss. So if I take you back to your basic for bad debt, my provisions and a balance it for account team. You still remember your provision for bad debt? Provisions and a credit balance, and it all provisions. So your BD, tangira kuno, what was the provision at the beginning? Then you calculate the provision at the end of the year. You might balance CD. The difference, do you still remember? There might capital credit it's your P and L. So in this now circumstance in IFRS 9, we are not impairment loss. And it is no panetica impairment loss. So let's take it through again. So how do we account if there is an impairment loss? There are only 2 methods, team, which are affected by impairment loss. It's the amortized cost, net fair value through OCI. So in other words, team, the fair value through P and L, I affected ne impairment. Also, fair value through OCI by election, I impairment. Does it make sense? So those 2, they don't do impairment. So atite impairment in the 2. All right, let's proceed. Then, do not dealer name per review question. This party and that jamba and that team. I need this part. I need you to understand this part. This part, the measurement. Please review question yedu ye IFRS 9. Ndinobva maona painobva. And ndinobva ndatokuratidzai what are the likely things which can trigger a review question. Which mistake? So ingango trigger that. So if you can see my here, Tukuti Susu at initial recognition. Team, do you agree with me? This is my chapter 5.1. Chapter 5.1. Initial recognition. Chapter 45.1. So my transaction cost. So please, do you agree with me? It's 03 is amortized fair value through OCI by election mandatory. Jono redu rekutanga the calculation yakafanana. So examiner kana achida kukupa review question iri easy. It's either akupa amortized cost yaka recognize was fair value through P and A. Why? because dzinosiyana pakuti iyi inoexpensa the transaction cost, then the other they capitalize the transaction cost. Zvoreva kuti team pakaitwa mistake, if there is a mistake which has been done, pane zvinhu two zvichiafectwa. Number one, kana yanga iri amortized which was recognized as fair value through P&L. Number one, tiri kuti isusu the total instrument redu rinenge rakato understated because we should capitalize the transaction cost. Number two, what it also means, it means ku P&L my expenses edu anenge aka overstate, profit yakato affect. So in that circumstance, team yatobva yatrigger IASG 8. If IAS 8 is triggered, the prior year adjustment, tinofanirwa kunotanga tateka into account what is the effect in the income statement, what is the effect in the statement of financial position. But it's fine. Then dzese method RE3 pa interest revenue dzakafanana. But inozosiyana pakuti iyi haizocalculate effective interest rate. The other three dzinenge dzacalculate effective interest rate. Mukupabata here. Then impairment is only applicable to this. Iyi haina impairment. So mukuona here parikusetwa review. Zvoreva kuti kana iri amortized cost yange yarecognized as fair value through P&L, transaction cost ichange yaka expense. Then calculate impairment loss. Yet this should calculate impairment loss. Plus, are you following? Can you see the difference with how the examiner can set a review question? Rukudo. Review question. How to consider these general principles? Yes. How to team review naturally. I found kuti review you miss the principles. They should never ever look the same. They are never the same. All right. Then another key thing. So fair value adjustment. Yeah, it's a fair value adjustment. It's a fair value adjustment. So all those things, team, to review. Those are the things you should look out for first. Deal with those things. All right, let's proceed. Then, so John already ndiro issue. The market to market reserve, but now take into account the issue ECL. And so let's go to this question. Auction question. CA is a company with a financial year of 31 December. On 1 January 2018, CA acquired 1,000 bonds at fair value. The bonds have a coupon rate of 10%, which is payable annually. Each bond is redeemable at a premium of 5% on 31 December. The market-related interest rate was 12%. The bonds had a low credit risk as the 31 December 2018. However, so please, if there is a low credit risk on 31 December 2018, we use what? The 12 months expected issue. However, the credit risk increased significantly on 1 January 2018 to 31 December 2019. Taku user the lifetime expected. Pana rasike papa. Then, before we even go further, let's calculate our instrument value. N equals to what? The instrument was issued on 1 January 2018 to 31 December 18, 19, 20. N is 3. Then PMT, again, PMT it's 2,000 times 1,000, team. Then times 10%, what do we get? Let's quickly do that. 2,000 times 1,000, which is 200,000. If we deduct 10%, confirm it's 200,000, team. Just confirm.
Yes.
It's 200,000, isn't it? Then future value. are they going to be redeemed? Each bond will be redeemable at a premium of 5%. But please, let's understand at whose option, isn't it? At a premium of 5%. So say 2 million times 5%, you know, Tipachi? 2.1 million. Confirm? Is it 2.1? Is my future value?
Yes.
Then my I, yeah, it's a my mental work. I use market rate of similar instruments without the conversion option. You take the 12%. So what do we get as our PV panapa team? What do we get as our PV? Journal floor as I will be scrolling down the end.
1975105.
197.5
105.
105 like this. So journal rangu team in why I'm going to do journal for both amortized cost nefe value through OCI because ndo dzinoita impairment. So rekutanga dzese dzichati debit investment apa pakafanana debit investment in bonds which is 1975105. So ndikuti dzakafanana apa ndoti credit bank. So both method here they give me the same answer 1975105. Then we don't have transaction cost. Confirm. So if we don't have transaction cost, journal redu for both amortized and fair value apa rinenge rakafanana. Happy days. Then at the end of the year, at the end of each year team, they are quit at the end of Batema dates, 31 December 2018. And the gore redu. Chekutang, I start with my PMT. That's my bank. I debit my bank 200,000. Then I debit my investment income. Kana wakuzvinzwisisa unozwa kuti inowanzobudira kudebit. So credit achi interest income. How much is my interest income team? 12% of the 197,105. So ndikuti apa pakafanana.
237,013.
237,013. Then the difference up, which is 37,013. So ndikuti for this first two method apa pakafanana apa. Ndobva ipapo iyi ndakuda kuchiti ichingoramba iri amortized cost. Tanzi isusu pane ECL yaitika. So the difference between these two, ticha debita impairment loss. Handiti kushandisa handiti taudzwa risk was not yet significant. Saka tikutora 92500 usho. Tobva tacredita ECL. But ECL is in SFP. Your ECL is in SFP, which is your 92 what? 500. Then we go to the other one. It's impairment. The fair value through OCI, please. It's still impairment of 92,500. But on the credit, it's ECL, but it's in OCI. That's the difference. ECL, OC what? I 92,500 like this. Is it making sense? But if fair value, sanduti panapa ndipe fair value through OCI and fair value through OCI. Out money difference. If fair value through OCI, inochidila, if is there any fair value to kudzwa process chichi ndizvoka on 31 December 2019 CA sold, but the fair value of the bonds on 31 December 2018 were 1050. So this one, adjuster for fair value, but the amortized hit a fair value adjustment. So the instrument yet up 1050 at time as with him. So 1050 times 2000. What do we get? What do you get? 1050 times 2000 because it's times the number of shares. Thousands the fair value. What do you get?
0.1.
2?
2,100,000.
Like this. Then, takuchiti 2,100,000 minus instrument rangu ratanga riri pachiti 197,5,105 plus ranga rawedzera ne37,013 chat. I don't take into consideration the impairment because it's a provision. Munhu angangotadza kubhadhara haasati atadza kubhadhara. Hi team. So impairment loss, you are saying he might fail or she might fail to pay, but they've not yet failed to pay. So for fair value adjustment, we don't adjust for that. What do we get? What do we get? Hello.
2012.
Yeah, let me save it here. The difference is what?
20,118. Uda the difference yacho, yes,
the answer.
the difference is 87,882.
87,882 like this. So iyo kunoku ndo patinoti debit investment in bonds 87,882. Then I credit market to market reserve. Maonere difference between these two methods in case vandipa iri review question. So ngwarira kuti ndapiwa iri pa which method nizoka. Then tamu next year tamuna 2019 please. So in 2019 ndiri kungotanga nepa investment yangu iya ndingobvira pa interest. So my interest team is 12%, but it's now 12% of what? The instrument is now at this value. It's 12% of 197 plus the 37,013. What do you get? It's a 12% of 197,5,105 plus the 37,013. Tochitsvaga 12% wacho. Please. Apa hatitsvage effective interest rate. Inongoitwa chete if there is a movement because of the transaction cost. If there is a movement because of the transaction cost. What do we get, Tim?
241,454.
241?
454.
So listen, Tim, damna 2019. So panapa yakutongo yashkoti debit bank. Ngupabata 241
454.
454. Then I credit I debit
But
investment. Yes.
Pa bank ati se PMT.
Sorry. Thank you. Sorry. PMT is 200,000. Then I credit investment yangu balancing figure. Ndizvoka. Then I credit interest income. What we calculate is the interest income of 241.
454.
454. The difference 454 is the same for both methods. The difference is the same for both methods. Then ndoenda ku impairment loss damuna 2019 please. Impairment loss yangu muna 2019 ndo patiri kunzi risk ya increase significantly. So if the risk increased significantly, ndinoshandisa the lifetime but ya 2019 which is the 16500. Ndo pandaka ndichiti vaingoti uchiri kuziva here journal reku A level pawainziita provision for bad debts account. So which amount should be included in our P&L? Ndine BD on the credit side here of 92,500. Then I've got my CD here on the debit side, or my CD of 160,500. Please, Tingo is saying 160,500. The difference each between the two, 160,500 minus 92,500. Ndo yandichaisa kujournal. What's the difference?
68,000.
68?
8,000.
Yeah. 68,000. So, team, muna 2019, kusvikaisa 68,000. No credit 68,000. Mapabati here, team. Ndingoitira kuti muone pamuri kuona. I do the same for this one. 68,000. I credit 68,000. Happy days. Any questions? If you got any questions, team, feel free to ask. Isn't it? Then, team, next thing we need to cover here, I want you to appreciate and understand these things. One thing, team, if you check your solutions, SNH, they teacher on.
Yes, Chris. Just a quick one. Apapata iro rimwe rikuenda ku-SFP rimwe rikuenda ku-OCI.
OCI, yes.
Yes,
OCI fair value
that,
through inoenda ku-OCI ndizvoka. Yeku amortised rinoenda ku-SFP.
Okay, so does it mean, maybe correct me, there's a follow up and wait. Does it mean then kuti rinenge rakagara ku-P&L kuzasi kuya?
Kuzasi after it's other comprehensive income.
No, it's fine, thanks.
Yeah. So that's the difference between the two. Then, team, innovate fair value adjustment again. In why? They've brought the fair value in a trick way. On 31 December, CA sold 600 of its bonds at fair value of 1220. So in other words, the fair value at 31 December yapa 1220. And rungodzoka again. Kushandisa space shom. It's 2000. My number of shares are asatachinja. Please, at 1220. Imboignore kuti pana atengeswa. Imari 2000 times 1220 because zvaitika at the end of the year. Saka the fair value ndo yandangoshandisa. Ndotanga ndaita fair value adjustment.
1,440.
2
440.
440 like this. Ndochiti minus. Open bracket again. I did move on. Minus. I opened the bracket. Tikada the longer route. Unoibvira ku 197. Tsvaga pese pakanzi debit investment. But ndogona ngotanga nekuti 2.1. Ameva zvameka sense. 2.1 ndobva ndati plus ndakungoedha 41454 chete. Team kana wasara vunza. Wanzwisise here kuti the way yandaita. All right. Anditi inini ndaigona ngotanga kuti 197 ushu ndizvoka. Ndobva ndati plus 37 ushu. Ndobva ndati plus 4154 ushu. Plus 87882. Inongondidzosa pa na 2.1. Ndisati ndainclude this 41 ushu. Inondidzosa pa na 2.1 ushu. Wazvona? Because 2.1 it was the difference ya minus 197 plus 37 ndopatawana 87882. So instead yekumbotangidza ndongobvira pana 2.1 ari kuinclude 197 37013 plus 87882. Pabatika. Saka chisimo 2.1 it's only the 41 454 we current year. Happy? Tobva tawana chi? What do you get?
2141454.
So ndakungoisa apa but uri muna 2019 214.
Ukuda the difference yacho
Is
yezvese.
the difference. Ndakutoda difference.
298,546.
298 456 ndizvo
546.
sorry mira 298
Yes.
456
546.
546 alright 298 546 ndo yandinobva ndangocredita kumarket to market reserve team but ngatichidhilei nedhi dilemma yauya tiri kunzi pane atengeswa vapabata pane 600 atengeswa 600 atengeswa at how much atengeswa at 1220 yakundidzosa kuchapter 3 tofanirwa kuita inonzi derecognition. What do you get team? 600 times 1220
732.
732. So please ndoda kuti muone madifferent methods edu. If it's amortized cost, instrument rinomeasure at cost price. Confirm team. Saka ndichauya ndosvika bank 732 ushu handiyo yapinda mubank, but ndiri kuti credit what? Ndiri kuti credit investment in bonds. Team, investment in bonds yanda disposa ndoda the cost price yeyanda disposa. So the cost price yedu bond redu rakatanga riri pa 197.5 up 105 parawedzera ne 37,013 please parawedzera ne 41,454 please ndozvaitika paranga riri at amortized cost. Confirm, because it does not take into account my fair value adjustment, but included in this amount mune impairment loss ye 160,500. Saka if 600 is disposed tofanirwa kubva taremover neka portion kayo ka disposwa. So iyi ndio cost ye instrument redu in terms of cost price. Radisposwa, it's only the 600 of the 2,000. What do we get, team? The cost of the investment ya disposal. Ndicalculate reo. Maona zvandaita. It's my 197 plus 37 pese panga pachiwedzera investment plus 41,454. But iri kureducewa the impairment loss, the total irimo mabooks 160,500. But and ndoti times the portion, the 600 of the 2,000. What do you get? What do you get? At fambe team toda kutry kupedza IFRS 9 ndisaisirire panzira. But topedzawo 10 wo vanhu vazorore. Avaverengi. Hapazororeki ka. What do you get?
567 922 67
567
922.
922. The difference iru credit, that's a gain on disposal. Team, ndati iyi method ipi tizoti kuirana ichi ibva minus from 732
164078.
164078. So team, pane chinhu chandaignore mukatarisa, handina kumbonotaura zvinhu zvati tunonzi day one losses what they are not taken. Mukatarisa masolutions enyu it's rare kutoona zvakaiswa zvinhu izvozvo. Ndizvoka plus it's just one thing. What's important, I'm focusing on the bigger picture. Ndizvoka then ndakuda amortized cost. So kana ya fair value through OCI team, ma difference anditokuratidzai aya ndo amunofanirwa kuzongwarira if it's a review question. So iyi inotongoya chikongoti debit bank 732,000 tototi credit investment 732,000 team zvabatikere. Why iyi yatongoti debit bank credit investment? Because yanga ichiitwa fairly valued, handiti? Saka investment redu ringori at fair value ipapo. So we derecognize the whole 732. Parubatikere team. Then, but ko toitene ECL, toitene MTM, because to put it, the 600 which was disposed, there is a portion, yeah, ECL. Mukubabatere team. Saka tiri 600 of the 2000 ECO yanga ichicreditwa. Let's remove the ECO of the one which was derecognized. ECO total iri pa 16500. Ichi? What do you get? 600 of the 2000 of the 16500. What do you get?
48,150.
48 150. Then I deal with MTM. And if the can add disposal, MTM actually you for no disposal could remove wow from the books. Saka debit, which is 600 of the 2000. And it times 16500 again. What do you get, Tim? Sorry, it's not of 16500. Please, MTM yedu in 87882 plus 298,546. Mason. MTM in 87882 plus 298,546. Ichi 600 of 2000 of the total of 87882 plus 298,546. Mukona panduku zvitora nditi. My total of the market to market reserve. What do I get?
That's 115,929.
Oh, what to calculate, Andy? 115,929. If you add
Yes,
the
sir.
two, your gain on disposal, Yekuno. I want to read the difference on how we get gain on disposal on the two methods. So the total of ECL yata reverse and MTM yata reverse becomes my gain or loss on disposal. Happy days. Happy days. All right. Let me go to the liability because also like element ke IFRIC 19. So when it comes to a liability team, liability, if I'm dealing with a liability again tikaenda pa 5.1 pari kuti for a liability it's minus the transaction cost. So it's your fair value minus transaction cost. Why minus transaction cost? If you take it back here, mukatarisa, it's a debit bank, credit financial liability. Then we pay for the transaction cost again. Saka it's credit bank, debit financial liability. That's the first key thing. Happy? Then subsequent measurement for a liability. Liability arena fair value through OCI team. Liability ringo rine zvinhu too. It's either amortized cost or fair value through P&L. So it's either amortized. Is it to hold or it's not to hold? If it's a liability. So if I take it like the journals, then another key interesting thing, if we do a fair value adjustment, there are two types of risk team. One is the market risk. Quite the on credit risk. Because of the nature of the entity, to face a risk yakadaiso. But because it is the risk in the market. So muchaona patineta the fair value adjustment for a liability. We take into account the to on credit reserve. Ne on credit risk. Ne the risk market. So I'll prove to you with a practical question. So up. No power to fair value adjustment. On credit risk reserve and liability. All right. Let's do using a practical question so that we have a better understanding. We see the bigger picture. So that we see the bigger picture. If we take it here, Panica question aka. CA is a company with a financial year end of 31 December. On 1 January 2018, we issued 10,000, 9%, 100 debentures at their fair value. The debentures are redeemable on 31 December 2021 at their par value. So you earn 18, 19, 20, 21. Please, for my dates, accounts my dates. Then the debentures are redeemable. The transaction cost amounting to 25 were incurred by CA on 1 January 2018. The market-related interest rate on debentures with similar risk profile was 12%. On 31 December, the fair value of the debentures taking into consideration the credit risk of CA is 980. Fair value ignoring credit risk was 950. So how do we calculate question yakadai so? So team toda kuita at amortized cost tobva taita at fair value through P&L. So at chekutanga always first things first, we determine the PV. So anyway it's 4, manzwisa 18, 19, 20, 21. PMT is 10,000 times 9% times 100, which is a toedzera mazero kumberi uko. Inobva yaita something like is it 1 million? The 9% of that amount, 90,000. Then future fair value, are redeemwa at their at par, which means inongoramba it 1 million. I use market rate similar with similar risk profile 12%. Then I get my PV of 908880. So now to debit bank 90880. Yeah. Debit financial liability 90880. Then we go to the financial liability, the transaction cost. If it's at amortized, the transaction cost is capitalized. But the same thing when it comes to fair value through P&L, apapakafanan. But the transaction cost is expensed in P&L. So it's debit transaction cost P&L, credit your bank. Maona difference. So this one it amortize the cost. Via calculator the what? Calculator the effective interest rate. So Vatana 12.9%, but the effective interest rate it's not applicable to this method. It affects this method. Sakata kuchitsvaga 12.9 of 883, which is this one. Debt finance cost, credit bank, credit finance liability. But if we go to the other method now, the fair value through P&L, atitsvage effective interest rate. Saka interest rate yedu icharamba iri pa 12%. Saka takuti 12% of the 9088 ushu. Ndokuri kubva this finance cost to credit a bank 90, balancing figure 19006. Then at the moment team, instrument rangu ripa mari, it's 90880 plus this 19 patati credit the financial liability up. Mupa bateri team. 90880 plus 19066. So ripa mari, if we add the total, I want to show you the practical side and do the. Hello? 90880 plus 19066 is not Pachi total. What total do you get? Katika sketching to 10. It's 930?
927, 946.
927.
946.
946 like this. Then on team, liability usazokanganwako. Liability chikwereti. Kana zvakunzi chikwereti mumarket chiri pachapa 950 tiri kuti takarekodha 927. Do you agree with me? But it's a loss, it's a fair value loss. Saka ndisiko debit fair value loss. Ndizvoka? Then this is iri on the market. but ndakuchiteka into account the credit risk yangu ye980. So ndakuti 980 minus 950 pano create inonzi only credit reserve ye30. Then pano debitwa, then the total ndiyo inozoenda kuliability. Ameno kana ndabatika ibaba team. Happy days. Hello. Did it make sense? Did it make sense? Yes, Maureen? Oh, it was a reaction. Thank you. Then, Tim, let's go to the compound. If there is any no question, let me go to the compound. Ne IFRIC 19, then we sleep. If it's a compound instrument, Tim, a compound instrument, kazhinji ukangona pangoita the option to convert. Moment there is an option to convert, comes a compound instrument. So download determine because map ndakuprovira the option to convert kazhinji kuti isusu it how does it create. So uchadila net the capital portion. From the capital portion I deal with the dividends, then I deal with the option to convert. Then mostly our conclusion will be a compound, because there will be an equity component, there is a liability component. If there is an equity and a liability component, my overall conclusion, it becomes a compound financial instrument, isn't it? So on 1 January 2018, CA issued convertible at par of 1.2. Over to 2000, they were issued 8, which means off. The first is debit bank 1.2. But I need to determine the present value. So ndakuya N, since it's 1 January 2018 to 31 December 2021, N is 4. PMT, it's your 11% of what? Of the initial amount, since it's at par, which is 1.2, that's 132,000. Then they are going to be redeemed. Please, they are convertible at the option of the holder. Maona paita nyaya yedu. So we cannot avoid paying cash. So future value is 1.2 if the holder elects. Then we use the one for profile with the similar debentures, 14%. Then we get 109. So Pandicha is 109. What you calculate as your present value is the liability component. So the difference of the liability component in the amount which was paid in the bank, that's your equity component. This is your equity component. Then from my equity component, the next thing I need to deal with, I just need to take the transaction cost. The transaction cost, it's capitalized, but I need to apportion it to the equity component. So I use this proportion 1095 over the 1.2 times 35,000. Do you know where up? Then 104 over the total of 1.2 times the 35,000 again. Do provide this amount. Then I credit my bank with the same amount. How about it? Then I have to calculate the effective interest rate. Why? Because there is a change, there is a portion here. It had creditor liability, then vata debitor liability. So I should determine the effective interest rate. Second part for 132, 1.2. Then the liability portion only. We don't adjust for the equity portion. The equity portion is not taken into consideration, team. Are you following? Is it making sense? So that's the approach. So this concludes IFRS 9. But let me just quickly explain to you this thing, team. There is what we call IFRIC 19. IFRIC 19 deals with what? Extinguishing financial liabilities with equity instrument. So in what they are simply saying, someone owes us money. Then takuda kubhadhara mari, we owe someone money. But maybe takaomero. So vatakubhadhara nemashares instead of paying using cash is the original agreement. But Tim, confirm you observed that we can also settle a financial liability or an equity instrument using shares. Confirm. We talked about that. So the question is, how does it differ now from the IFRIC what? From IFRIC 19. So the difference between IFRIC 19 and your financial instrument. IFRIC 19 team, to go at the commencement, initially there was no agreement. You could uchandibhadhara nemashares. But for it to be an IFRS 9 at the inception of the agreement, there should be an option yekuti tinogona kuzokubhadhara nemashares in the initial agreement. Hello? Did it make sense, Tim? Handisikuda kuti muzokonfusa kuti ndepapi paneitika IFRIC 19 nepasingaitike IFRIC 19. So IFRIC 19 team, tutoti isusu a debtor creditor renegotiate the terms of the liability, which results in the debtor extinguishing fully or partially by issuing instruments to a creditor. So it was not in the original scope. And IFRIC 19 and entry shall not apply IFRIC 19 in which circumstance? Number one, where the creditor is also a direct or indirect shareholder and acting in his capacity as direct or indirectly existing shareholder. The creditor entities are controlled by the same part. So in this circumstance, I will tender IFRIC 19. Then lastly, extinguishing a financial liability by issuing equity shares in accordance with original terms of the financial liability. So if it's in accordance with the original terms of the agreement, it's not IFRIC 19, it's IAS 32 and IFRS 9. Hello? Is it making sense, Tim? Happy days. That's key. That's key. You need to understand that difference. When is it IFRIC 19? When is it? When is it? So when it comes to IFRIC, see your basic accounting. Team tinofanira kuusa the fair value of the instrument. Up. Pane party yandingoda kuti muzongongwarira up. When equity instruments, this part, are issued to a creditor to extinguish all part of are recognized initially, and end shall measure them at the fair value of the value of the liability extinguished. So first, we consider the fair value of the instrument the receiver. If it's not available, that's when we use the 1 year it was extinguished. Happy days. So, pazongoroneka question ak. A simple question ak. And that's it up. But that's the basic. The other approach is more or less the same with what you do in your IFRS. So, for example, on 1 January, we issued my bonds anyway 1050, so it's debit bank. credit this. Then in the year ended 31, accrued interest coupon was 90,090 and 100,000 respectively. Please. Apa zvakaitika izvi. Iyi ndio bhengi kai. Iyi ndio the finance cost kai. Balancing figure, that's your financial liability. Then so parikunzi tazobhadhara using mashares ane fair value ye 1.1 we issued. So takato issue, saka we should credit ordinary shares. Then we debit the liability with how much? It's 1050 minus this. Because we extinguisher, we are paying to reduce a bit the liability. That's a liability team. Happy? To reduce a liability, we debit the liability, isn't it? That's the key. The difference is a gain or loss. Inenge yatobuda panetika gain or loss. Happy days. Happy days. Question. So I'm done for today. I'll be communicating. I hope you have joined the channel, confirm team. So, and also you have subscribed to our YouTube channel. I've shared the link again for the channel. Let's have more videos. Let's join the channel again. Let's join the channel kuitira kuti ndingoisa all the communication. Let me share the link for the channel. Please just open that one, the YouTube one now. Mobva mangoti subscribe and to support us. Then let me share for the channel. The link for the channel. I don't know what's happening. Laptop yangu iri kuremerwa. Let me share the link for the channel as well. So we can just join the channel. Let me share so that Sunday, likely we are going to deal with the consolidation, detailed consolidation, send off. Then I think in other module, please, in other standard, you can request I might share within my my archives. You are facing any other challenge, I might squeeze and share. All right, so happy day. So let's follow the channel. Let's subscribe, please. So before I end the session, let's just subscribe. Go quickly open now. Go to subscribe to the channel. Your support is very important. Thanks for attending, team. I'm deeply humbled by the number of my participants. At least it shows you are doing something. People are noticing. I don't take it lightly, and I do appreciate team. So quickly open, then subscribe, then the channel. Thank you. Thanks so much. Teaching is my passion, so I enjoy lecturing. That's my first passion. Brandon, I think that was a reaction. So let's subscribe to the channel. Let's follow so that I'll communicate. Andimugona ndikumboita ndichikanda tumagunani tumachit notes etc. So let's the channel. I think the WhatsApp channel. Then also let's follow through the YouTube. Let's subscribe. Let's subscribe. Good night, everyone.